Welcome, welcome, welcome. I know this is a familiar, unfamiliar face. Alex McShane is not able to join us today, and I am going to be your host. Welcome to the 30th episode of Bitcoin Magazine Live. We have some fun segments today and some awesome guests, and we'll kick it off right away with our first guest, Andrew Yang, over at Casa. Andrew, thank you so much for coming on Bitcoin Magazine Live, man. How you doing?
Yo, I'm doing good. Maybe your viewers are a little disappointed not to see the presidential candidate, but it's all good. It's all good.
I will admit we had a conversation at one point because I did not know your last name. And when I messaged that to the chat, everyone was like, wait, are you kidding me? Did you not tell us? And I was like, no, don't worry. But I kind of want to really quickly just start the conversation that we were just having right before we went live about Sound Money Fest.
Oh my God.
I mean, like my girlfriend keeps going back and forth on like, I say I want to go see Logic, but he's going to be performing at the same time as Steve Aoki.
Oh, come on. What are you doing?
I know there's a part of me where it's like, I love house music. I do, but like, I love rap. And like, I am going to be jamming out when Logic plays every day. Oh my God. You will just, if you see a guy with like crazy long hair, just, so any of you guys watching, if you don't get a chance to see me the first couple conference days, if you go to Sound Money Fest and see me dancing like a madman, feel free to come join and vibe it out.
Yo, I'm down with hip hop and like R&B, dude. Like, okay, low key, I was actually vice president of the hip hop club in high school. So
okay.
Your boy has moves. Your boy has moves, bro.
I love that. Who of our Sound Money Fest? So for those who are not familiar, Sound Money Fest is a one-day music festival that is on the very last day of the conference. There's no speakers, there's no overlap. So you're not missing any of the marquee keynote speeches. You're not going to miss any announcements. We are selling individual tickets for that as well. However, like if you have a GA ticket, you also have the invite to attend Sound Money Fest. It is going to just be epic. I'd love to just sort of hear from you, maybe what artists you're really excited about.
Yo, okay, first of all, this is sick. Like when I heard that y'all were gonna do like a music festival, I expected like Bitcoin musicians, right? Or like YouTubers, but y'all have like real artists coming here. Like this is like a real music festival, bro. Like you got Logic, Steve Aoki, like Deadmau5, dude, all of these people. Like DJ Soda, like what? I mean, let's go. I'm all of that stuff.
Shout out to Kim Taylor, who has been programming this whole thing. She's been a rock star to really like bring this to life. I was joking with her about a month ago. I was like, dude, this is the exact type of thing that like when I was in college, my like fraternity e-board, we would have just looked up all of the upcoming events for that semester and been like, yo, there's a one-day music festival here in town. Like we don't need to travel. It's only $100 a ticket. Like, let's go.
Yeah.
So,
what is it's gonna 110 to like get in? That's wild. That is so
just for the Sound Money Fest ticket is $110. So and you can use the discount codes. I believe YT Mag will still work even if you just want to attend Sound Money Fest. I won't hold it against you. For you youngins watching, I would have probably done the same thing. But I cannot emphasize enough. If you have a GA ticket, you're coming. I'd love to maybe hear from you. I know you attended last year and you're going to be there as well this year. What was like your favorite memory or moment from last year?
Dude, last year was a trip, and honestly, I have mad respect for the Bitcoin Magazine team because y'all did something that I thought was impossible. You guys threw the first in-person conference, the largest in-person conference in the middle of a pandemic. Like, I don't know how y'all did it, but like, I have mad respect for y'all. And it was wild. My favorite part was like when I went like maybe 2 days early, and no matter what random bar I went to, there was a bunch of Bitcoiners. So we literally like overtook like the city of Miami, which was awesome. And then yeah, like the conference was dope. You had like a lot of like really cool speakers. I was there when Jack Mallers announced the whole El Salvador thing, which was, that felt like historic, man. That really felt historic and special. But one thing that I thought was really cool was the sponsorship area was always packed. You know, I've been to some conferences and like the sponsorship areas get zero traction, but you all had hell amount of people out there. So I mean, if you Bitcoin companies are looking to sponsor a conference, definitely do 2022 because they got it going on. I don't know what you guys do. I don't know what the secret sauce is, but like Casa's sponsoring, we're out there, we're gonna be there. So like we know what's up. We know what's happening.
Any brands out there listening, you heard it from one of our brand partners already. They loved it. I mean, I was not a member of Bitcoin Magazine at last year's conference. I was literally going booth to booth, shaking hands, trying to meet people, trying to get a job in Bitcoin. And let me tell you, there were some booths we were waiting 15, 20 minutes for someone to like be free. And I mean, we've talked on this show a lot. I've shared I agree with you that the Mallers El Salvador announcement was like monumental. And it is just, as a Bitcoiner, anyone who's in that room, like you will remember when El Salvador was the first country to make Bitcoin, or at least put forward the notion that we're going to make it legal tender. To clarify, they did vote on that like a week later, but Bukele made that announcement there. Like, I'll never forget. I was sitting next to one of the investors of Strike. Like, this guy is like one of the money people behind Strike. And he was like, just wait, like so what's about to happen is about to like change your world, my friend.
Insane.
He did not oversell. He did not oversell that.
Yeah. Another one was I don't know who made this pairing, but freaking Max Kaiser and Michael Saylor. Come on. That's like two amazing like personalities, just like they were like playing off each other so well. Fire talk right there. We need more of that energy.
I know Kaiser's very excited. I'm in a Telegram chat with him, and he's so excited that he asked me to not mention the project that we're working on.
Okay.
And just wait until we see each other at the conference. That's how excited he is. He's ready. He's already. I could see him. I could see him just being even more brazen than he was last year. I mean, the way he's just F Elon and the bright orange shirt with his marquee white blazer, like that's the Bitcoin fit right there. That's the Bitcoin uniform.
Max Kaiser, he is a Bitcoin treasure. You know how like they say, oh, this person's a national treasure. This guy is a Bitcoin treasure. I don't care if he has haters or whatever. I don't care, dude. Like, I love the guy. He's awesome. Max, I hope you keep doing what you're doing, man, because you're awesome.
Shout out Kaiser, shout out Maulers, shout out Michael Saylor. I mean, hey, they're all going to be there again this year in 22. They're all going to be speaking and in addition to countless other guests that we've announced, countless other guests that we will be announcing. If you want to stay up to date, maybe hear some of these speakers talk. We host a weekly spaces on Twitter. I believe it is at 6 p.m. Eastern, 3 p.m. Pacific, where P, the head of programming, and George, who is the head of marketing for the conference, put together the spaces. Any and all new speaker announcements sort of join, and they just sort of talk about the conference. Last week, we ended up, the whole conversation got derailed. My bad, P. And we started talking a lot about some of the legislative issues that were sort of happening right around that same day. So feel free to tune into those spaces as well. Get a little bit more info on some of your conference speakers, maybe those that you're not as familiar with. I'd love to, Andrew, give you the opportunity to talk a little bit about Casa and just sort of what you guys are working on for those of our audience who aren't necessarily as familiar with the wallet product you guys have. Maybe touch on that a little bit as well.
Yeah. Cool. I mean, wait, real quick, is the price of Bitcoin pumping? Are we good?
Yeah, is it?
Dude, I mean, I have this awesome green screen for work, and I got to use it sometimes. But yeah, dude. So no, Casa is I think it's the most secure way to store your Bitcoin in cold storage. And honestly, it's pretty easy to use, super flexible, it's redundant. And so I think, you know, what's interesting is that like for Bitcoiners, we have like high time preference, right? Like, so we look years out into the future. And that's why we invest in Bitcoin, because we think like, you know, no matter what the volatility is today, in 10 years from now, it's like, we think it's gonna, you know, appreciate very, very well. Low time preference, my bad. And so here's the thing, like, how are people thinking about their Bitcoin security, right? Do we have the same low time preference behavior and processes for securing your Bitcoin, right? Are you protecting your Bitcoin 10 years from now, 20 years from now? Like, how secure is your setup? And are you confident that like maybe in the next generation that you're going to be able to transfer your Bitcoin to your kids, right? And so Casa is a multi-sig system, and we help you figure all that stuff out. And we have a system where there's no single point of failure when it comes to your wallets, and it's redundant, it's safe. And what that means is that, you know, instead of having like one Bitcoin wallet for one key, one seed phrase, you can create one wallet with 3 keys or 5 keys. And what this means is that if you lose one key, you're still fine. Like it's okay if somebody like steals one of your seed phrases, because they need to hit a certain threshold to send Bitcoin out of that multi-sig wallet. And so that's why I think it's a lot more secure, redundant, safe, and great for keeping it for 10 years, 20 years, 30 years from now.
I think you hit a great point about just time preference. Those of us who are Bitcoiners, like I would say the vast majority, we're not really looking to resell and go back to a fiat currency. I'm sure there are investors who are still sort of stuck in that mentality. So I won't say everyone, but I would be hard pressed to find true Bitcoiners who don't view, hey, I'm not doing this for the next 5 years. I'm doing this for 10, for my children, for the next
Right.
100 years, for generational wealth. And I love the fact that that is your priority. It is very clear you have made a wallet for Bitcoiners by Bitcoiners. Talk to us a little bit about like maybe not necessarily mistakes that were made, but how you guys came to that conclusion. Like, what were some inputs that you heard, or maybe I won't say like bash on competitors, but maybe something you noticed of competitors doing that you were like, hey, definitely not that. Like, what are things that you are really focused on in that regard?
Yeah, you know, one thing about our multi-sig wallet that I appreciate is that this is the only thing we focus on. You know, this is our bread and butter. We don't do anything else. And I think that's one of the reasons why people appreciate Casa, because we're hyper focused on Bitcoin. We're hyper focused on multi-sig security. And the benefits of that is that our UX is beautiful, man. Like I recently pushed out like some videos and creative videos and tutorials and stuff. And if you guys aren't familiar with how multi-sig works or what it uses, like go to our YouTube channel. It's Casa Huddle on YouTube. And yeah, just check out our videos and you'll see just like how pretty and beautiful and easy it is to like receive Bitcoin, send Bitcoin, do health checks and all that stuff. And yeah, some mistakes that I think we help people avoid is actually one of the most common reasons why people lose their Bitcoin is because they shoot themselves in the foot. Some funny stories I've heard, especially on Reddit, is that like I remember one dude, he freaking wrote a story in a Google Doc, and in that story he interspersed his seed phrase into it, and he thought, oh, nobody's gonna crack the code, like this is super secure. Like a week later, his funds got stolen. It's like, come on, man. And then like last year, or there was like that story of like this Ripple exec who basically locked himself out of his Bitcoin wallet because he forgot his password, right? And so like our system helps you from making that same mistake where you lock yourself out of your wallet. If you use our software, if you follow the Casa standard, your Bitcoin is going to be around for generations to come. Oh, I think you're muted, Q.
Yeah, my bad.
Yeah, you're good.
I'm literally so floored at someone's arrogance to think that, like, oh, Google Sheets is going to be a safe place to just store. I mean, look, am I guilty of maybe reusing passwords that Google has been like, hey, by the way, this password has been compromised? Yes, for accounts that like I'm mad at, I have to make an account for. Like, go ahead, hack that account. But, but like, I mean, it's interesting too because we also keep learning about like what is right practice and what is wrong practice
Right.
on safety and storage. Um, can you talk a little bit about like things that you have maybe changed your mind about over the years being a Bitcoiner? Was there something that when you first started, you were like, this is how we should think about it. This is how we should approach this problem. And then now you're like, I can't believe we ever thought that, or we were so wrong.
Yeah. Before I got into Bitcoin, I did not have a very good security mindset. I wasn't an engineer. So one of the things I love about Bitcoin is that it helps you become kind of like a Renaissance man. You've got to be good at, macroeconomics. You got to be good about digital security, physical security. You got to be good. You got to, I feel like have a somewhat decent understanding of like, how code works and all that stuff, and even cryptography. So it's such an interdisciplinary thing that Bitcoin is, and it just leveled me up in all of those areas. And so learning more about digital privacy, learning more about not reusing passwords, right? Like I reuse the same password on all my stuff before Bitcoin, but using a password manager I think is great. But yeah, I guess like one thing that kind of was a bit of a stretch and took some use to get it comfortable with is like our mostly seedless setup, like at Casa. And so I was so, bought into the ideas that like you got to back up your seed phrase, you got to write it down, punch it in steel plate, protect it, all that stuff, right? But once you move to a multi-sig model, it's like it's a little different. Like you don't have to be as rigorous in terms of backing up that seed phrase, right? And so for our 305 model, we actually recommend that out of the 3 hardware wallets that you set up, because the Casa key and the mobile keys are key 4 and 5, only keep one seed phrase. And the reason for that is because you're going to take your hardware wallet, you're going to place it in different geographic locations. So somebody could come across your setup, find the seed phrase, take a picture of it, and put it back. You've now been compromised and you don't even know it.
Right.
And that's not like a super great situation. And so that's why, one of the reasons, that's why we recommend having a mostly seedless setup. Write down the seed phrase to set your hardware wallet up, then burn it and destroy it. But make sure you only keep one. And by keeping one, you'll be able to always recover your Bitcoin using the Casa key, the mobile key, and the one seed phrase you wrote down. And so just embracing the mostly seedless setup was a bit uncomfortable at first, but now that I've done it, and like I use Casa as well, it makes sense to me. So yeah, that's one of the lessons I've learned.
I mean, to be honest with you, I cringed a little bit at the idea of burning my seed phrases
I
that I've
know.
scattered around various locations, given to like the next of kin sort of deal.
Yeah.
I mean, it's interesting to see sort of how we are developing the security out of this space. Like it is very much changing, much like all of the information that we get from the space. I like to say Bitcoin is an industry that's still in its teenage years. Like we're very much talking about a business that is changing overnight on a regular basis.
Yeah.
I love the fluidity of the way you guys approach it. I love how, you guys are staying on your toes and able to sort of change and transition elsewhere.
So Q, like on that note, bro, like I just want to settle on this for a little bit. The coolest part of my job is that I feel like I'm pioneering stuff that like is unique to Bitcoin and that's never been done before.
I
And
love that.
like it is so awesome. And so like here's an example, our inheritance program, right? There's nothing else in this space that does what we do. There's no way that you can have an inheritance program and set up with a company in a non-custodial way, but we've figured it out. And it's super cool. The way that we've set this up and structured it is unique to Bitcoin and it's unique to Casa. And the way that we've kind of approached it and understood is that like, Coinbase, Gemini, Fidelity or whatever, Like these are custodians. They actually have to keep your assets, right? And so they're actually liable for a whole bunch of stuff. And that's why you have to be super rigorous when it comes to transferring your assets once you pass away. But within the Casa system, we don't have custody over your Bitcoin. Even if we wanted to transfer your Bitcoin to your beneficiaries, we couldn't because we don't have the keys. And so what we've done is we've created a system where our inheritance program where, we transfer the Casa account to your beneficiaries. You list your beneficiaries ahead of time, and we make sure that you have all the keys that you need in order to recover your Bitcoin. And the beautiful part of it is that, the Casa doesn't necessarily take on a huge ton of liability. It's the person that the account gets transferred to. Right. And so rather than having to sign a whole bunch of legal contracts and getting lawyers involved and all this stuff, it's literally you name your recovery custodians, who can be a beneficiary or a trustee or whatever. You name them beforehand by registering into our program. And then if you pass away, they show a death certificate, government issued ID, and we will immediately transfer the assets to them to bypass probate. So that's like an example where I feel like, man, we are doing some really cool stuff. And we're pioneering inheritance for a non-custodial system. And I don't know, it's just a privilege to just be a part of that.
I love that, man. Like, the fact that you're so passionate about being able to like shape the industry forward in a direction that you want to see it change, and B, to create an offering for your clients, for customers, that is just not available anywhere else. My hat goes off to you guys. So cheers to that, man. I do want to present a question from our YouTube chat really quickly, and this has actually come up a few times. But is Casa worldwide, or where is it available currently?
So we're worldwide. We don't KYC, right? Some other providers and multi-sig providers, you got a KYC. You don't have to KYC with Casa. I think we support credit card payments in several jurisdictions, but you can pay with Bitcoin. So if you're like, no matter what part of the world you're in, you can pay for your subscription in Bitcoin. And so we can serve you. So we can serve anybody. And the best part is you can even do this anonymously. You don't have to tell us your name if you don't want to. We don't want to know. And so, yeah, like anybody in the world can purchase Casa, and you can do this anonymously.
Wonderful. And you kind of touched on it. This feeds into another question we just received, actually. But the subscriptions, I'm assuming there are tiers. Maybe walk us through like what price points and what they're being offered in each price point, if you could. Just another question from our chat.
Yeah. Okay. So Casa, we have 4 tiers. There's Silver. It's a single key. It's free. Just download the app, log in, you have it. Second tier is Gold. This is a 2 or 3 multi-sig, $120 a year. It is, super cheap, I think, to use a multi-sig wallet. And then from there, we have Platinum. Platinum is a 3 or 5 multi-sig. It's $1,800 a year. And it comes with an onboarding package, and you get a client advisor such as myself. That means you get on a phone call, a video call with a real human being, and we'll walk you through setup. And if you have any questions, we're super responsive. We'll respond to you day of, within 3 hours, like that's our SLA. And then Diamond, you get the same thing in Platinum. You can enable a 6th key if you want. You can get team members where you can share ownership of this multi-sig with other people. If you want, you get access to the inheritance program, and you also get that onboarding package plus a steel play. And so Diamond is $5,000 a year.
Awesome. Well, Wade, I hope this sort of helps. And Robbie, I hope over in Belgium, Isai, Tony, shut up. Robbie, over in Belgium, I hope this helps you and you're able to safely and securely hold your Bitcoin. Andrew, I do want to maybe shift back over to a little bit of confidence, a little bit more Bitcoin news.
Let's do it.
I'll present this to you sort of right now, but just this morning, India released an announcement that they are essentially, their finance minister, I believe, is rolling back on their Bitcoin ban, and they've introduced a 30% tax on cryptocurrencies at large. That said, as I was reading a little bit more, like the regulation of that is questionable, and whether or not they'll be able to actually collect that tax remains to be seen. I just find it interesting that yet another country that turned around, not even it was a month ago, 2 months ago, that they announced crypto, Bitcoin, you're banned. Absolutely not. In a billion citizen country, they banned it after, and don't forget the country just north of them with over a billion people as well has also banned mining, has banned trading of Bitcoin. So you now have these two large countries that are essentially both of them did ban it. Now one has balked on that ban. You also have Russia that tried to ban it and then immediately turned around and was like, wait, time out. If we do this, we could be the best at it. What do you, geopolitically speaking, do you think this plays an effect on what China may or may not do?
Yeah, I think that like it's a good thing that India is rolling back regulation, even though 30% is pretty steep as a tax. I mean, we have something similar with like long-term gains taxes here in the US. It's good. It's good because it's going to bring more volume to the crypto markets, to the Bitcoin market. And the trend that I'm seeing is that you have like these, developing countries or people or countries that aren't like first world countries. They're leveraging crypto to get an advantage, right? In the meantime, you have these first world countries like the US and China who are going the opposite direction, and that doesn't make sense, right? Man, and like specifically around US, like guys, like Bitcoin like solves like the economy. Like, look, if you want to improve the US economy and you want to increase Fed rates, like open up regulations around Bitcoin, man. Right? If you want to help the economy grow, open up regulations around Bitcoin and crypto and trading and all that stuff, right? In a pandemic where you're asking retail stores to shut down and not open up, and you're losing workers and you can't hire workers, and you got 7% inflation, like what's the answer? The answer is to move to digital businesses, like, and that's what crypto is, right? Like you can stay at home. So instead of limiting it and Joe Biden saying, oh, it's a national security that we got to regulate Bitcoin, like screw that, like open it up and you'll improve and bring health back to the US economy. Like, come on, to me, it's like a no brainer. And it's really telling because like literally over this weekend, I just saw, I went to a mall, and it's kind of sad because it's like a hometown mall. This is where like I grew up. Like my first blind date was at this mall, right? And like this is where my high school and junior high kids, like this is where we would go to just kick it. I go in there, empty stores, like a whole wing of the mall, no stores open, completely shut down. There was this one store where they just gave up. If the store was open, you have clothes all over the floor. It's like completely disheveled. There was no attendant, but it was open. Like they've given up, right? And what's interesting is that like, I feel like the retail market and malls, like with the advent of like Amazon and online shopping, like they were just making it and they were surviving. Like these malls were still open pre-pandemic. But once that black swan hit, everything shut down. They were screwed. They couldn't open up. They couldn't make money. And so what's the answer? Honestly, to me, the answer is opening up regulations around Bitcoin and crypto, man. Open up the floodgates, let businesses thrive, let America become like, the leader in all of this. And let's go, man.
I love where we go in this scenario as like sort of the end. I want to push back a little bit because I don't necessarily agree with how we start. Like present day, there's no regulations. If a business wanted to turn around and say, I will accept Bitcoin in whatever capacity, they theoretically could just do that. There's no one saying, no, don't do that. And I almost feel like regulation would inhibit that. It would almost put up these sort of like barriers where, oh, you know what, actually you can't pay for this with Bitcoin. You can, but like not at this time because whatever. Oh, we want to be fair to the bank, so you can only transact in Bitcoin 9 to 5. Like some stupid regulation that doesn't make sense because people who don't understand Bitcoin are going to be the ones writing these laws. So can you elaborate a little bit more? What is an example of legislation that you'd like to see introduced in this capacity?
Yeah, Bitcoin is legal tender, hands down, right? So that's an example of where regulation helps. Then you can go to whatever online merchant you want, pay for stuff, not have to pay cap gains, and like you're done. Like you don't have to worry about all that minutia around that. There's one thing that So currency is traded all over the world, and none of that has to, is like let's say for example, I go to France and I have the US cash, and then like I go to France and I buy like a coffee there, like there's no cap gains on that either, right? And so I think it's fine to like maybe if you're buying and selling Bitcoin or as an asset for a speculative asset, like okay, maybe like you do pay cap gains on that, but like if I'm in a different country and I'm purchasing a good or service, then I don't think there should be any cap gains around that, and that's just going to increase usage on the Lightning Network. That's going to increase Bitcoin's utility. It's going to increase digital commerce. It's going to bring health back to the economy in a non-retail friendly environment. Yeah, so that's one example where I think it'd be huge. It'd be huge if we could do that.
Vegans on me, just as a heads up, unless you're in El Salvador, no, Bitcoin is not legal tender anywhere else in the world. So that is why we're having this conversation. And you bring up an excellent point. Once a currency is legal tender, you're no longer taxed on any gains. However, I want to again sort of challenge you, because there is this notion of, oh my God, there's so much money being made in Bitcoin and crypto at large. Sorry, I said the bad word, but let's think of it on a global
Yeah,
macro scale for just
let's do
a
it.
hot second. Sorry, this is what happens when you give me the mic. There is, I believe, a large pushback that is never going to be vocalized about making it legal tender in the US, because you will no longer be able to collect those taxes. So does that mean that we follow a formula much like many Bitcoiners have laid out, where we go to pure store of value first, and then we go to a medium of exchange, i.e. we turn it into legal tender? Does that formula still allow for businesses to have this? Does it allow for this unlock to where you're able to just travel borderless? I personally think so, but I'd like to sort of let you answer that.
Yeah. So one point of clarification, like foreign currencies are traded back and forth like all over the world, like on derivatives exchanges. All that is taxable events. It's cap gains, and it's because the purpose of that is like speculative, like they're on those exchanges. And so honestly, I think it's like a similar model with like Bitcoin. Even if Bitcoin is legal tender for purchasing goods and services, that's not a taxable event. But if you're buying and selling as a speculative asset, and like you're on an exchange, you're on Gemini, you're on Kraken or whatever, or you're on Swan, and you're buying and selling the stuff, then maybe that is a cap gains. I think that's a fair thing, and that's a fair way for people to, for I don't know, yeah, for all this to work.
Totally. I mean, look, I'm not a fan of how much we pay in taxes. I pay too damn much, and you and I both do, because we live in California.
Yeah.
So that already sucks.
Yeah.
I don't like the way government spends their tax dollars.
100%.
I will shift for a hot sec to a different example of, taxing an untaxed industry. Marijuana. It's on the state level. As someone who has smoked and bought weed for years, let me tell you how mad I am that it's legal in California. It is so much more expensive. Sure, the quality is more controlled. It's not as variable. Take that with a grain of salt as you will. It's a crop that grows, like just like a grocery store. You can get a bruised apple. You can get a shitty strain of weed without realizing. You can get a bunk bottle of wine without realizing until you open and drink it. So I always loved the meme where we make weed legal, and every dollar that is collected from those taxes, you turn around and it's immediately put into repaving roads, and we call it Operation Pothole. It makes sense. It just makes sense. So what is Operation Pothole in Bitcoin? What does that look like, and what do we call it?
Oh man, I don't know. There's like, I mean, so this is like a personal question, and there's a lot of things that like I'm passionate about, like, mental health, like helping like the homeless. And so, I mean, on a personal level, I would probably want to go to those initiatives, but who knows, like maybe it's infrastructure for like the US and stuff. But man, like, the US is historically bad at like waging war against like, bad things. Like, what was it? The war on drugs, they lost. War on cryptography, they lost. War on Bitcoin, they're going to lose. So there's a trend here, and I'm always going to be bullish on Bitcoin, no matter what happens on the government side of things.
I also, I'm on the side of all press is good press. And
Yep.
even when, look, you can directly point to China banning Bitcoin, the hash rate dropping drastically, and as a result, the price followed shortly after that.
Yep.
There is a very clear sort of, you can point to cause and effect. We're drawing conclusions, but I think confidently we can draw that conclusion. However, then we saw the hash rate increase. We saw a new all-time high hit. And if anything, one of the largest concerns over Bitcoin prior to this mining ban out of China was they have a majority of the hash rate. And
Right.
now we've seen the hash rate democratized.
Yeah.
I almost want to side on the side of, like, I welcome other countries. I frankly welcome any developed nation to say, no, we're not doing Bitcoin.
Mm.
To allow for these countries that have sort of been like screwed over by the fiat system and who have not benefited from the fiat system to have their data rise up. I think it is vitally important. However, I also know people who are like, no, we can't, like, if too many countries ban it, then all of a sudden we are siloed off. There is that part of game theory where we may give credence to the idea that, hey, as more countries adopt, more countries will adopt. I think there is another side to it that if more countries ban it, more countries may also ban it. And then you turn into this game of, all right, where's the majority meeting? Is it more people have accepted it or more people have banned it? I'd love to hear your thoughts on something like that.
Yeah, I mean, just ban it if you want. You're missing out. Like, if you ban it, you're banning yourself from Bitcoin. And I think that's your mistake. And to your point, we're seeing developing countries adopt Bitcoin, and we're seeing, like, mining, like, becoming more decentralized and democratized. And the beautiful part is, like, I don't know if you've read The Sovereign Individual.
Oh, love it. We had a conversation with Breedlove last week about it.
So you're seeing what he's describing in real life. You're seeing a digital world bringing access and resources and finances and just upward mobility through the digital world, right? El Salvador was completely screwed, completely dependent on, they're a completely dollarized country, right? But now that they have Bitcoin, they're starting to move, they're not as susceptible to US inflation and not getting affected by it as much, right? Because they have Bitcoin on their balance sheet. You have countries adopting Bitcoin mining, right? And you can have businesses that can develop in developing world countries and be profitable. And then you have governments automatically benefiting from that because, you're taxing businesses from profitable companies. And so these people who maybe didn't have a way to move up and to gain more wealth, now they do. And it's a beautiful thing because we're seeing the globalization of a world economy being centered around Bitcoin. And to me, it gets me so excited and brings more equality into the world.
I love it. I mean, look, we talk a lot in the Bitcoin community. Bitcoin fixes this, Bitcoin solves that. You've alluded and touched on a few of these things, especially economically speaking. Um, what is another area that maybe isn't focused on that you would like to sort of start a conversation over Bitcoin fixes this, and how does it, in your mind, fix this?
Yeah, that's a good question. So what's an area that I think that Bitcoin fixes that other people haven't, like, talked about? Is that right?
Yeah.
Yeah.
And I'm putting you on the spot, and you could cheat and just like roll back and be like, well, economy, finances, fiat currency, like, definitely put you on the spot.
Yeah, that's a good question. I think one thing it could solve is digital identity. And here's the nice thing about it from a multi-sig perspective. And don't want to give away too much, but it's kind of like you can treat your multi-sig key set as a digital identity, right? And then so that's if you receive Bitcoin from finance, if you receive Bitcoin, that's tied to your multi-sig. And your digital identity can persist even if your key set changes, because let's say you lose one key and you rotate in another key to create a new key set, well, you have 4 of the same keys from the previous key set. So that's another way to just kind of digitally identify your identity online. And so if we had that as the starting point of people's online digital identities, then it's flexible, it's redundant, and if it's good enough for money, then it might be good enough for online identities. And there's lots of different ways that you can kind of sign for that. Like if you can sign a message from one of your keys from your key sets and to verify or to log into like Reddit or something, right? So that's like an example. Yeah, and then there's a couple of other thoughts that I had, but oh man, it just skips my mind. But I think okay, so here's another one. So when it comes to mortgage lending, right? You need to have a social security or you need to have a credit score, good credit score in order for you to access a loan, right? But you don't need that anymore if you have Bitcoin, because it's a collateralized loan. If you have the money, if you have the Bitcoin in order to secure a loan, who cares what your credit score is, right? Who cares what your government identity is, right? And so that's another example where Bitcoin, I think, fixes this problem of digital identity, government identity, because it doesn't matter. It doesn't matter what your credit score is. You have wealth, you have Bitcoin, use that as collateral. Yeah.
No, I love that. I mean, look, I'm a big believer that Bitcoin is going to change the way people are going to buy houses in the future. We see so many issues come up over that, whether it's access to loans, just or equal opportunities to get after it. But money talks, and if you have the money, if you have the Bitcoin to back it, it then becomes a question of who values that Bitcoin as much as we do. I am spacing on the company, but I know there was a recent announcement where there's now like Bitcoin mortgages being accepted, and it's again game theory.
I think it was Ledin. I think Ledin
Yep.
announced it, recently.
Yep. And again, game theory. This bank is now offering it. Now they have a new revenue stream. They have a new opportunity. Oh, you know what? Boom. They all of a sudden got Bitcoin, and now they see, hey, wait a minute. This stuff is really valuable. Like, we have undervalued it. We don't necessarily need to increase our ratio of Bitcoin to collateralization, but we can still now start prioritizing this. And then other banks start to see, hey, wait a minute, they're making more money. The main difference between our bank and theirs is they're accepting Bitcoin. Okay, then if they're making more money than us because that's the only difference, we got to follow suit. And so the dominoes continue to fall. I mean, real estate in LA is the worst. So I don't know how, we'll need a lot of Bitcoin to get our houses in LA, but that's a whole other issue. As my 8th grade PE teacher said, LA and San Francisco are the butthole of American real estate.
Ooh.
You're not wrong. Southern California.
But it's facts. Yeah.
It is so valid.
Wait, Q, let me ask you a question, dude.
Please.
So Bitcoin 22 is coming in April. Mm-hmm. I'm hyped. From a programming perspective, like what am I gonna see? Like what's gonna happen, man? Dude, because give me some inside scoop, something. Give me something to hype.
I'll tell you this. As someone who attended the conference last year, you remember the main stage, how it was overflowing.
Yes.
Like people were bum rushing when Saylor went on stage. Then we had Jack security, like locked it up, all of that. So that main stage from last year is the equivalent of the whale section of the main stage this year. So we have a specific section for our whales. So if you are a whale or have a whale pass, there will be a nice little roped off red carpet section, not really a red carpet, so don't quote me on that, but you'll have a roped off section. That entire section for the whales is the equivalent of what there was last year. That is like 1/10 of the size of the stage, the audience area.
Dude.
So we were going over some stuff. Things are changing literally day by day.
Yeah.
We're announcing new speakers all the time, and I will never steal the thunder from the programming team, given how hard they work on that stuff. But like, for example, we were just having a conversation about a video component that we're also building out. Chris essentially helped me clarify this. The entire conference of 2021 can fit in this year's main stage.
Dude.
Like,
what? Okay, wait. So
more
last week was,
bathrooms. So no bathroom lines. Like that was the night.
hey, actually, that's a good point. Okay, y'all need to get a well pass. Like, I had one because Casa sponsor. Y'all need to get a well pass just because of the bathroom situation. Look, I know. Look. I know y'all gonna have more bathrooms. I get it, right? Like, but let's be real. The line's gonna be out the door. This was the first time in my life where I saw that the female restroom was no line and guys' line was just like out the door for like, you had to wait 45 minutes. Because I had the well pass, I could use the bathroom like whenever I wanted, bro. So look, if you, just that's one of the benefits of well pass. You guys need to get one.
I think we have to admit to ourselves as Bitcoiners that unfortunately 90% of our demographic is male. So yes, I was shell shocked when I am with my friend's wife. She goes into the bathroom, comes out, and I am still in line. And she was like, wow. I was like, I'll be honest, I'm about to go like behind a booth or something because I cannot wait in this line. I did not. I waited in the line, probably cut, but I mean, beyond that too, I mean, I loved the area that it was at last year. It's an arts district. They're big on street art, and I love just seeing what artists can come up with, especially city to city. It's so unique and so different. I very much appreciate that, and I loved that. This time we're in Miami Beach, man. Like it's gonna be in Miami Beach. We're gonna be like, I'm gonna be in swim trunks the whole time. I don't care.
Oh, I love it. I freaking love it.
It's like, we joke sometimes about how like last year people were like surprised. You brought up a very valid point. Like this was in the midst of the pandemic. I actually, funny enough, was interviewed. And when they sort of asked me, this did not make the cut of the actual interview. I think it was with NBC or whatever. They essentially asked everyone in line, like, oh, have you been to an event of this size since COVID? Because it was garnered at about 20,000 attendees. It was the largest event that most people had gone to. And then I'm the jackass who was like, no, I was just in Scottsdale a couple of weeks ago and a concert. There were like 50,000 people at that.
Hugh, why you blowing smoke up of Bitcoin bag, bro? That's hilarious. But yeah, dude. All right, let me pitch this idea to you. Okay, it's a programming pitch. You ready for this?
Hit me.
Okay, I don't know if you've already invited Andrew Yang. You don't have to confirm or whatever.
He has been invited. Like not you, Andrew Yang. He is on our website already, so we can say yes.
Oh, okay.
Former presidential candidate Andrew Yang, as well as former presidential candidate Joe Jorgensen, are both confirmed. They will be there. As far as what their programming looks like, I believe that is still TBD.
Okay, no. So I got you on the programming. You ready? You track, follow me? Okay, so Andrew Yang interviews Andrew Yang. Done. Let's do it. That's it. That's the pitch, bro. Let's go. Like that would kill it, dude. Like social media outlets, news outlets would love that shit. You know, Andrew Yang interviews Andrew Yang. Come on, people love it. So pitch that to P for me, baby. Get me on that. Let's go.
I will. I want to have give you the opportunity to just touch on one more thing. Then we're going to go to a quick commercial break before Natalie Brunell comes on live with us. But I know we touched on it a little bit about the beneficiaries for Casa. Can you just remind our viewers, Pleb Chris was asking which of the 4 plans offers them the ability to add beneficiaries?
That's the Diamond plan. The Diamond plan.
Cool. Yeah. So Pleb Chris, you heard that. Diamond plan with Casa will get you the ability to set up for your beneficiaries. We're going to take a quick commercial break, and then we're going to be joined by rockstar Natalie Brunell, and we'll be talking all about the MicroStrategy conference yesterday, as well as some breaking news. We'll also be giving out some sats in the meantime, so stay logged on, stay tuned in. Welcome back, guys. I'm still here with Andrew Yang. No, not that Andrew Yang. And as well, Natalie
Better
Brunell.
Andrew Yang, the better Andrew Yang.
Natalie, thank you so much for joining us. How are you doing today?
Thank you so much. I have to get that same background that Andrew has. That is so cool. Mine's so boring. No, I'm doing great. How are you guys? What a busy week.
Busy, crazy week indeed. We will start our conversation a little bit talking about yesterday's MicroStrategy panels. I know Jack, Michael Saylor, and Lynn Alden all gave some incredible talks, and we'll touch on some of the points that they made. And then I also want to talk to you a little bit about this India news that came out earlier this morning, and we'll debrief you live and let you sort of run with it a little bit. But first, we'll talk a little bit about Michael Saylor. MicroStrategy, again, buying the dip, continues to just triple, quadruple down on their strategy. All of us here, big fans of that. Would love to hear from you of any sort of highlights that Michael mentioned in any of his conversations that really stood out to you.
Yeah, I never get tired of hearing from Michael Saylor. And I think it's just incredible how bullish he obviously is and how steadfast he is. When we had that correction just like a week or two ago with the whole markets bleeding out and equities falling, he stands his ground, and everyone that doubts him or doubts the company and their ability to withstand some of these corrections and whether they're going to all of a sudden capitulate and sell. It's amazing to see that he's like, no, I'm going to be buying all the all-time highs, right? I think that's one of the things he said, which was, I think that's great. It's a great symbol of how much he believes in this, because this is, again, a long-term game. You can't look at these short time horizons. And I really love all the things that I've been hearing out of the MicroStrategy World 2022. Lynn Alden is probably one of my favorite voices in this space to listen to. Although every time I listen to her, I feel incredibly dumb. And like, I wish I could have just like a 10th of her brain, because she has so much insight into macro and just like the history. I mean, in one of the conversations, I don't know if you saw, she was comparing inflation today to the 1940s and contrasting it to why it's not like the 1970s and the amount of, especially the amount of leverage that we have today and the amount of debt. And so I always learn a lot. These have been fascinating conversations, and we can dig in a little bit more.
I honestly loved the comparison, the 40s, 70s, and present day. I did actually get a chance to catch that portion of it, despite it being during our live segment. And she brought up some great points. I wish we did have those charts, but could you maybe share a little bit with our viewers of just sort of what were some of the differences she was talking about in regards to the 40s, 70s, and present day, and why she thinks it's more 40s?
Yeah, well, I'm definitely going to butcher this. So I'm just going to go totally
we're paraphrasing
from a 30,000 foot view with no knowledge the way that Lynn has. But basically in the 1940s, this was World War II. We did have a lot of debt because the country was printing a lot of money to help get us out of the war, essentially. And so we were pretty leveraged, and we did have asset bubbles. And so inflation was similar in that sense, because there was so much government intervention, as opposed to in the 1970s, we didn't see that as much. And we didn't have the amount of debt that we did. We didn't have the amount of debt creation. So Volcker, as the Fed chair, was able to raise interest rates in a way that wouldn't entirely collapse the market. Whereas today, one of the things that I talk about when I go, on my media hits is they can talk all they want about tightening and tapering, but it's really impossible to do because it would cause such a cascading credit collapse. I mean, everyone is so leveraged. It's sort of that everything bubble that I'm sure you've heard it referred to. We've got a real estate bubble, asset bubble, equities bubble, more money poured into equities over the last 17 years than in history. And so, really just like the tiniest prick could pop the bubble. And so what do? They have to change, they have to change their tune. They have to keep the music going. They have to turn dovish and keep the quantitative easing going, which I think is ultimately great for us because Bitcoin is so correlated to liquidity, which is something Lynn also talked about. We've been correlated to liquidity, So if the money printer goes burr, Bitcoin's going to go burr as well. Although right now, with everyone sort of expecting tighten or deny, she does agree that there will be choppy waters ahead because investors are just not sure what to do. And we don't have as much demand as before. Before we had that stimulus that was like a direct demand that allowed for, Bitcoin's price to respond. There were buyers. Right now, we need those new buyers to come in, and the institutions would obviously be the best ones because they can write the biggest checks. They can make the biggest purchases. So she covered a lot of ground, and I'm interested to see what happens over the next year, because some people think like we're going to hover in this range of 30s, 40s, maybe go to 50, but then come back down. And I actually disagree. I think that they're going to be forced to make a turnaround. They're not going to be able to taper. I think we're going to have like a melt up, if anything. I think we're going to have a ton of people going in, seeing that the Fed is actually not going to be as hawkish as they claim. And I think that's going to be good for Bitcoin.
I love that. I love sort of the fact that you're not really necessarily buying into the hype. I kind of want to put you a little bit on the spot right now. You threw out some numbers of where people think are going. You said your direction. Do you have a conference day prediction for a price range for Bitcoin?
Conference
Day prediction.
Okay, so we're what, like a month and a half away?
2 months.
2 months. Oh yeah, February, March. I would say that we're going to be back, if not higher, we're going to be back in the 50s range, 50s and maybe 60s. I don't necessarily know that we'll have a new all-time high by then, but look, I mean, I just spent actually like almost an hour and a half on a call, on an interview for my podcast with this guy named David Hunter. And by the way, he's not a Bitcoiner, but he's very popular. I don't know if you've heard of him in the Twitter space. He's got like 48 years of experience on Wall Street, and he's a strategist who he's been making calls that have been on the money for everything, like oil, interest rates, silver prices, all of it. Like over the last 2 years, it's like he came from the future. It's like, boom, check. Prediction, boom, check, prediction, just like his forecast. And so he's been leading up kind of in the same way Peter Schiff has, where like we can't keep the music going on forever. Like the Ponzi scheme at some point has to end, and we're going to have this crash, and the bubble's going to pop, just like we've had bubbles pop in 09 or 08, 09 and 2000 in the 70s with the Nifty 50. And so, he's been predicting some of these like prices and corrections, and he says that we're going to have this massive melt up. And I agree with him. I really agree with him. I think they're going to back off. Like I mentioned, like the Fed's going to back off and people are going to start throwing money back in. So I think personally, that's going to really benefit Bitcoin. And I think ultimately there has to be a crash, but my hope, and this is what I've told people just personally, my hope is that Bitcoin at that point has reached like a good 6-figure healthy amount, like 150, so that when we do correct, ultimately we get down to support of like 50 or something. And look, in the long run, none of this matters, but I'm just saying, I think I agree that there's going to be so much volatility because we're in such a precarious position with inflation, and we've blown up the bubble so big that, yes, we can print more money, but at some point we're going to hit like 20% inflation, and that's going to crush people. So let's get them onto Bitcoin as soon as possible.
I will not attempt to take away from this interview. Be sure to check out Coin Stories. Natalie does an excellent podcast. I believe, correct me if I'm wrong, available everywhere podcasts are available, as well as your YouTube channel. I don't want to take away from this. However, I have my portfolio open, and I just kind of need to know, what is the sector that's going to blow up based on your conversation with David? What is it equities that he's really worried about? Is it the real estate bubble that he's working out? You brought up a very valid point. Everything is in a bubble right now because the money printers just keep going. Does this mean everything pops? Does he think one by one a domino falls?
Yeah. So he thinks that the equities and these growth stocks, he thinks that the technology companies, the FANGs, that we're not going to see the types of highs that we might see over the next year or in a melt up scenario for probably many years to come, if ever. I mean, that's pretty dire. That's a pretty dire prediction. But I do think that what we saw a couple of weeks ago was almost like a preview of what would happen when everyone starts to decide that the Fed has lost all credibility and they can't keep this charade going, and everyone just has this immediate exit. I think it's going to be almost muscle memory, right? I mean, we saw how quick that like sell-off was, and people thought we're going to crash even harder. We're going to go to levels that we haven't seen in many, many years. And then all of a sudden it corrected, but I I mean, some people in this space think that we can keep doing that. I don't think we can keep doing that. I don't think we're going to reach S&P 10,000, you know? So I think it'll be interesting to see, but definitely equities will fall, growth stocks will fall, tech stocks will fall, commodities will soar. You know, people are really bullish on like oil prices are going to go up, copper prices are going to go up. And I think Bitcoin is going to go up personally. So
Alex McShane, if you're listening, this validates my argument as to why steel stocks were a great way for me to get out of my tech and Bitcoin adjacent equities. So thank you, Natalie, for validating that for me.
Well, you know, it's funny. Like I've been talking to David for many months, and he's oftentimes one of my most popular episodes. But he's not a Bitcoiner, but he aligns with all of our views. And I keep trying to orange pill him, and he doesn't want to be orange pilled. He thinks that basically people will rush to gold, and but he admits he's like, when bonds go from 0% to 10%, possibly even higher, that money has to go somewhere. And I think that we will be the beneficiaries of that because people are starting to get it, whether they admit it or not. Like institutions and policymakers, they are starting to understand the advantages of Bitcoin. And I think that we will see just like a deluge of just a demand when there's really no place to go because the Ponzi scheme is up.
Yeah, I mean, you're absolutely right. I'm trying to honestly wrap my mind around what would happen if a contrarian who has so properly predicted so many downfalls before turned around and is like, yep, no, I'm a Bitcoiner. Because
I
like
know.
that could be the catalyst for some institutions to start to perk their ear who've maybe been a little quiet. I also want to go back a little bit to the MicroStrategy conversation and maybe dissect a little bit about what Jack Dorsey was talking about. My hero, his poster is hanging up in one of my rooms somewhere out there in the world. But share with us a little bit about just sort of what he said, what your takeaways were from his conversation, and maybe what you're keeping an eye on out of block.
Yeah. So I just thought that it was incredible how he describes the resiliency of the technology and really just diving into some of the technical aspects of why he believes in Bitcoin as this really powerful, transparent network. You know, just kind of going back to the simple points of like, this is open source, just transparent protocol. It's not trying to be anything that it's not. And he said the more that they can sort to hear is not only does he have the kind of conviction that Michael Saylor does, where, you know, he's really making his corporation all about this and trying to spread the message and spread awareness about the technology, but also just the idea of supporting the infrastructure. So like the Lightning Network, making sure that people understand, you know, what innovation is happening there, supporting the core developers, knowing that, yes, there are some challenges to the settlement layer, but ultimately there are these building blocks on top of it, these secondary layers that will be incredibly empowering to make this into potentially more of a transactional technology network as opposed to just a store of value. And obviously there are some questions there, right? Because Michael Saylor has always been the advocate saying, no, Bitcoin is digital property. It's a store of value. It's not a currency. But at the same time, Lightning and what Jack is essentially building and encouraging, like that empowers it to be a currency. And so I think that there are going to be some interesting developments there. And obviously we know that he's now venturing into mining, which I think is really cool. I just think that there's so much, you know, innovation, competition, genuinely capitalistic values that are in this whole ecosystem that Jack sort of touches on. And it's really, really exciting. So I think people like him will usher in more CEOs, more institutions to venture onto the Bitcoin wave.
Yeah, I mean, when you see thought leaders like that just very clearly articulate sort of what they see, why they see it, and where they see things going, it's hard to ignore those type of conversations. I want to ask you, because you touched on the fact that Saylor is sort of the side of store of value. Jack is very much open to beyond store. Like, I'm sure that he believes in the store of value, but he looks at it so much more beyond that as well. Where do you sort of stand in this discussion? Are you a purist of let's go store of value, then peer-to-peer transaction, and then who knows where this goes? Or do you sort of go ahead?
Yeah, well, that's a great question. And I think that my answer will change depending on where we're at with the state of like I think the markets and economy at large, our global economy, because right now, as Americans, yes, we have our US dollar, which is relatively stable in the short term, but zoom out and it's collapsing over time. So you have a relatively stable asset that's depreciating over time. Bitcoin is an extremely volatile asset in the short term, but it's appreciating over time. So in my mind, it's like, why would I want to spend something that I truly believe will go up in value, right? And not to say that it's going to be to the extent of like the pizza situation where, the money you spend today, it's looking back at like, 10,000 Bitcoins for a pizza or whatever. But I do see it as like, why I want to save this, because I truly believe that the value is going to be so much greater in the future. That being said, I think it's an incredibly powerful tool for transactions and as a medium of exchange in other countries, especially countries where they need to subvert oppressive governments or they have wildly higher inflation than we do here. So I'm incredibly inspired when I go to places like I went to the Oslo Freedom Forum conference last year with Alex Gladstein and his organization, and just hearing from people in different countries, from Afghanistan to North Korea to places in Africa and Latin America, where they're using it in real time because they need it. They avoid remittance payments, when they're sending money between family members. And it's an incredibly powerful transactional tool as a currency. But I think that this is where things have to evolve a little bit more, because I've always felt this way. If we position Bitcoin as a threat to the US dollar, to the US banking system, to the central bank, to the Fed, I think we're going to create more hurdles for ourselves. We're not going to be doing ourselves any favors, because immediately I think it's going to turn politicians off, and it's going to turn the people who don't understand Bitcoin off as this sort of like destabilizer in the system, right? We had Hillary Clinton saying this destabilizes the world. Well, no, you guys destabilize the world with your dumb policies over the last, 10 years, 20 years. So Bitcoin fixes this, but not a lot of people understand how and why. So I think that it's kind of like that Friedrich Hayek saying that, in the Bitcoin standard, Saifedean references this quote of like, we can never take the power of money out of their hands unless we do it in a very sneaky way, where at the point it's like, powerful enough and it's grown enough, they can no longer do anything about it. And that's the way I've personally always viewed Bitcoin. It's growing organically on its own. It's like sprouting its seeds little by little, and pretty soon it's going to be a forest. So if you want to spend it and you're in the US, cool. But like, I personally want it to be my property, my digital real estate, my store of value. And for the folks that are in El Salvador or in like places like Lebanon or Turkey where inflation is skyrocketing, yeah, use it as a medium of exchange. Go for it. But I think this it'll change, and someday unit of account. But like, we're not there yet.
Bitcoin is the only thing that both Donald Trump and Hillary Clinton could have agreed on, regardless of what their belief is. They both agreed on it.
I know. I'm shocked that Trump doesn't like it. I mean, and his wife, being for Solana or whatever. Like, I don't really understand it, but whatever.
I mean, my theory always goes back to who stands to lose the most by going to a Bitcoin standard. And it's those closest to the money printers, those who have controlled the system and created the mess and chaos we're in. You bring up an excellent point of, instead of antagonizing those same people who are going to, frankly, whether or not they realize it, they're going to stand to lose the most on a Bitcoin standard, but killing them with kindness, accept them into our community, and then we turn around and we stab them in the back. I love that. Love that strategy.
That's a much more, ruthless way to say it. But no, I really think so. We have to be sneaky about it. Otherwise, I mean, because think about it, we went from the Greenspan put to the Bernanke put to the Yellen put to the Powell put. Like, how many puts do we need? And meanwhile, these guys are like insider trading and making all that money. Nancy Pelosi's buying her Google call option calls. Like, how the hell did she know about that? I think everybody is tired of just like the bureaucrats making themselves fatter and richer and never being affected by it. Meanwhile, secretly, who knows, maybe they're buying Bitcoin, and like everybody else gets screwed. Like, no. We're creating a new financial system where this doesn't happen.
Hey, Papa Powell has a stash. I'm telling you this right now. Like, I don't care what anyone, I don't care if he says, no, I don't own Bitcoin. He owns Bitcoin somewhere. And maybe it's GBTC.
I honestly, I really believe that too. Right. And this is the beauty of the system, is like, how would we know that? how would we know? But some of these people have to be stacking and just not talking about it. And these big tech CEOs, the people who are technically closest to the printer, we've already seen billionaires come out and say, yeah, I've got a bunch of Bitcoin from Mexico to here in the US. And I think we're going to see more people admit that they do. And I certainly believe that there are politicians out there who aren't admitting it, but might have been stacking. Nancy Pelosi probably has a massive stack.
Honestly, just wait to see the announcement of Nancy Pelosi's wallet 2 or 3 days after the announcement of whatever Bitcoin regulation comes out. 100%.
Oh, totally. Like, of course, I would expect nothing less.
On the topic of policy, there's been a lot of news. You covered recently some of the news about legislation being introduced stateside. Before I make you essentially regurgitate your words, talk to me a little bit about what Natalie Brunell would do if she had the power to increase or introduce, legislation in regards to Bitcoin. What is Natalie Brunell's first law of Bitcoin?
The first law of Bitcoin
for America.
Yeah, I would buy it as America. I would print money to purchase it so that I could try to fix this massive debt spiral. No, honestly, that's the first thing I would do. I would make America buy Bitcoin in the same way Bukele did. Let's do that. The legal tender thing, like, again, it's just, I'm okay with it. Like, I believe the more freedom, the better, and people should be able to transact with it. But I'm not bullish on these bills passing, the ones that we're seeing in Arizona and some of the candidates in Texas coming out saying they want their states to, legalize Bitcoin as tender. I think it's really great and progressive and inspiring of them to come out and say that. I just don't think we're prepared yet, for sure. But in the future, I definitely see that happening. Long term, I think that that's really inevitable. I certainly don't want them to tax it in the way that India is threatening to tax it. I mean, geez, it's like, I remember a couple months ago when Yellen threatened to tax unrealized gains. Well, you know what? Let's tax your unrealized promises. Let's actually tax your speeches to different places 100%, since you make a bunch of money just going around speaking to the big banks that you supposedly regulate. I'm really on a kick today, aren't I?
I love this. We can keep going for hours on this.
Yeah. So I wish that the US would recognize this as pristine computer network, technology network, and also just put it on the balance sheet. Put something on the balance sheet that's not a melting ice cube, and stop buying treasury bonds.
I love it. I mean, I very vocally have said, what if instead of the trillions of dollars the Fed printed to boost our stock market, legalized casino? It's a legalized casino. We're not calling it a stock market. And instead just bought Bitcoin at under 10K a token at that point, we would be in a much better position, I personally think. And I'm glad that you see it that way as well. You touched on now briefly the Indian news. I do want to dive into that a little bit with you, and then we'll return to the domestic issues at hand. As you mentioned, India has essentially rescinded their previous ban on cryptocurrencies, and they're introducing a 30% tax. How they're actually going to regulate this tax remains to be seen. But what are your first thoughts and instincts on this news of essentially India balking on their ban?
Yeah, I mean, it's just not surprising. I mean, ever since 2011, we saw China go back and forth too, right? It's like every single year there's a ban and then they can't. And it's funny because I think that they're trying to capitalize on the fact that so many people in the public still don't understand this technology. So they can come out with these broad statements like it's banned, as if they can actually ban something that is completely distributed and that they have no control over. So it's not surprising that they've reversed on it. I think it's also interesting to see some of the situations that have happened where certain policymakers diverge from the central bank, like we saw in Russia, where it's like the central bank clearly doesn't want to release its grip on their monopoly over money, and they see this as a threat to their system and a destabilizer, whereas other people like President Vladimir Putin in Russia is saying, no, this is an economic advantage. We have to harness this technology. We want to be on the forefront so we don't fall behind other nations, especially as an emerging market. So I think it's really interesting, the dichotomy that we'll see, because it's like on the one hand, politicians know they have to stay at the cutting edge of the newest technology. They know people are investing in this space. People are making money in this space, and people are doing amazing, innovative things in this space that they could also, some of it they could tax. And then on the other hand, they see it as this massive threat, and they don't fully understand that their jobs at risk. And so, it'll be interesting to see how it plays out. How do you tax? Like, it's so hard to keep track of these wallet transactions. And I know that they're trying to introduce some of the technology, like I reported on the address ownership, that like the verification systems, like we need to make sure to raise awareness so that does not happen. You should not be in an environment, in a system, a platform where you have to give up all this information that, identifies you specifically as this wallet owner and having to hand over pictures and social security numbers. Like we don't want any censorship. We don't want anything like that. So I think that there just needs to be more education and more awareness, because they're going to try to take the money. Of course they are. Why wouldn't they? They want a piece of it. So it'll be interesting to see how it plays out.
Yeah. I mean, again, we keep hammering the same point home. So it seems to be a general theme globally, but those who have the most to lose are going to be holding on to their power as tightly as possible. And we're seeing it play out. India and Russia. We'll continue to see this play out around the world. But now coming back to America, we're seeing a lot of buzz. Arizona introducing it as possible legal tender. A candidate out of Georgia is also introducing Bitcoin in some capacity for their state. Texas has done a lot of work. And now we also have Cynthia Loomis, whose bill should be getting introduced to Congress in the coming weeks. What are some things that you're keeping an eye out? What are things that you're like, this is going to be the big thing out of this space? Or maybe we're just sort of waiting patiently to see decisions get made?
Yeah, I mean, I'm certainly waiting to see if there's going to be more clarity on the other cryptocurrencies. One thing that, Lynn and Michael actually touched on this during the panel yesterday was just talking about the idea that it's pretty clear that regulators view Bitcoin as digital property. And here in the US, we really do still have stronger property rights, or the notion of property rights, than in places like China that are more authoritarian and they have more control, from capital controls to social controls. So I don't have too many worries about Bitcoin, other than a lot of the policymakers, especially on the left, coming out and making those energy arguments and attacking the mining community. But we are seeing those hearings, right? Like we just had one a couple of weeks ago where people from the industry, leaders from the industry, are coming out saying, no, we're going to educate you on how proof of work actually works and why the energy is not as much as you think, and it's also a net positive for the world. So I'm waiting to see, what other developments happen in the mining space, since ESG is like this big narrative right now. But also I just think that the other cryptocurrencies and the other tokens will at some point be deemed securities. And I wonder what that will mean, what that will look like, because, we've talked about this before and we talk about it in the space all the time. Bitcoin, yes, it's technically crypto, but it's so different from crypto. It's so different from any other cryptocurrency out there. It really can't be lumped under the same umbrella. It can't be, taxed or looked at as the same type of investment, I think. And so there has to be more clarity. And I think the clarity will be a good thing ultimately, because it'll give, some direction to institutions and whether they could put it on their balance sheets or whether pension funds can invest in this space. And for me, the biggest thing probably will be that spot ETF. Like, I think if we had that spot ETF by now, we would be in the 100,000 and higher range. And they're really dragging their feet on it. Lynn Alden, touched on this before. It's not like this is unprecedented. Canada already has a spot ETF. So like, why are they dragging their feet? Is it because they know they're going to shoot the price up? So I'm waiting for like regulatory clarity surrounding the others being securities, the ETF, and just, more mining developments.
I always love the argument that, as far as energy and mining goes for Bitcoin, the fact that we don't really calculate just how much energy goes into maintaining banks, maintaining our fiat currency. I mean, I would love for someone to, in the next hearing, literally show the chart that shows, hey, just to operate all the ATMs in America, this is how much energy that uses.
Yeah.
Just to maintain our military that essentially backs up our dollar. That's how much energy this uses. We seem to.
That's a great idea. Someone could crunch those numbers. Someone has to crunch those numbers.
Viewers watching, there you go. This is your first opportunity to do some work for Bitcoin Magazine. Feel free to put this together, write an article, and we'll share it.
I think that's a great idea. I mean, I know people have used that, the Christmas tree lights or washing machines or dishwashing machines, but yeah, I would love to know. I mean, ATMs, that's a great one. How much does it cost to operate ATMs across the whole country or the whole world? And yeah, it's like games, like stadiums. How much how much
Whoa, whoa, whoa.
power do all those
Whoa, whoa, whoa.
massive, I'm just saying, like, we're okay with power in general being used for different things, but we're not okay with it for like a monetary network that's truly inclusive and distributed. And it's like,
Just
what?
don't turn off the NBA games.
No,
I need my NBA games for the rest of this
don't
season.
worry. Oh, nice.
So, moving though back to the Bitcoin, back to legislation. I do not mind spending some time, maybe not necessarily attacking and antagonizing, but maybe being a little bit critical on some of the decisions that are getting made out of DC, both by Congress as well as Fed policies. Off of some of the Fed news last week, where interest rates are going to slowly creep up. We saw the stock market react negatively to Jerome Powell just opening his mouth as usual. Where do you see the Fed's stance changing in regard to Bitcoin, or can it ever, simply because they are the ultimate money printer?
I think that the Fed right now is just really trying to hold the house of cards together. And I think that they're really concerned about how they're going to react to any move by the stock market. I think right now the Fed is reactive. It's like the arsonist turned into a firefighter, is a quote I think I read on Twitter. I think that's a smart way of looking at it. I don't think that they're as concerned with Bitcoin. I think that they're just trying to prevent a recession, because we saw how quickly we could venture into that territory. And again, I think that that's just like such a sign of where we're at in terms of the bubble. Like this, like a single prick and the single, signal that a bunch of investors are selling off could send things really spiraling. And that's very scary given how much debt we have. Like, we're at historic levels for like the Warren Buffett indicator, like market cap to GDP, debt to, it's crazy right now. And again, for the people that think that this is just sustainable, they'll keep printing. I've had some people say, well, they'll start capital controls. Like that's a horrible, or price controls. That's horrible. Like we better not venture into that territory. And I just think that the market has to correct eventually. It will send Bitcoin tumbling like it has. It's sort of almost a canary in the coal mine, probably because it's so liquid and so new. And for some institutions, it's a totally risk on asset. But let's not look at it in the short term. Let's not think about what number it may or may not fall to. That will be a huge buying opportunity, because when the dust settles from this fiat nightmare that has been created, everyone will hopefully finally move on to the Bitcoin standard, and we will suck money out of bonds. We'll suck money out of gold. Who cares about gold? It's 10 trillion. We can be way better than that. We've got, $200-400 trillion worth of assets we need to pull from. So I think in the long run, this will be great. But yeah, right now it's like the Fed doesn't know what to do. The Fed is going to try to raise rates, but they can't. They can't pop the bubble. To raise interest rates into a meaningful level that would actually combat this inflation, they'd have to raise it to 5, 6, 7%. That would be the boom of all booms, So they're going to do what they can, but they've lost all credibility. They're in a car careening toward a cliff, and an adult needs to get behind the wheel and steer it in the direction of Bitcoin,
Honestly, you made me think of this quote that I saw the other day that I want to share. But we have this habit in this country of like kind of deeming people who are above a certain age. I apologize to our viewers who are a little bit older, but I respect you and thank you for everything you have done and provided. But we tend to look at people in the 70s and 80s as like, hey, you're on the decline. Maybe you should retire from your job. Maybe like you should go and get your eyes checked, and we need to double screen you for your driver's license. And yet these are the same people we decide to let run our country. Where do we, I don't know. I just wanted to share that thought that sort of crept into my mind during that, but you're absolutely right. The Fed is lost. They've lost the plot. It will be very interesting to see how things play out this year. I am fully in agreement that you could try to do whatever you want, but you're not going to unravel this. I equate it to the scene in not Infinity War. Yeah, Infinity War, where they try to like unravel one of the characters who's like tied up. But anyways, right. I won't go down that nerd path with you yet. I want to talk a little bit now about legislative efforts. We you touched on a little bit like this bifurcation. And I believe a couple of days on the show, we talked about with CJ Wilson, the idea that Cynthia is pushing forward is going to essentially say every single digital asset is going to come to this funnel. If you are decentralized, you go over here. If you are centralized, you are essentially going to meet the SEC. What are your thoughts on this? How does this play out in the grand scheme of things, as well as how does this actually get regulated?
Yeah, I mean, I think it's going to be a tough road ahead because, again, so many policymakers still need to be educated. So I really applaud the efforts of people like CJ Wilson and Amanda Cavallari and Dennis Porter, who are spearheading these efforts to really like get in there, ask these candidates, like, what is your stance on Bitcoin? Do you need resources? Let me help you. Here's a way to, talk about it with someone who's on the right. Here's a way to talk about it with someone on the left. And like, let's bring us all together on one thing since we're so polarized. But, I agree kind of like what we mentioned before. Bitcoin has to be differentiated and distinguished from everything else. And there has to be sort of two funnels that, eventually these cryptocurrencies go into, Bitcoin being that digital property and that store of value and something that we need to protect and take advantage of as a country economically. And from a competitive technology standpoint, I think mining we could really use to our advantage to create jobs, innovation, clean energy. And then everything else has to go through and, it doesn't pass the Howey test. So I don't know what's going to happen ultimately, but there needs to be a lot of clarity. I think that there's going to be a lot more conversations moving forward. And I hope that they make really great decisions. What's crazy is like, sometimes they throw in stuff into these massively big legislative documents, right? 3,000 pages. And there'll be like a paragraph and all of a sudden you need to like create a new bill just to correct that one paragraph, because now you're all of a sudden opening up the ability to spy on accounts or being able to freeze people's funds, like in one of the last pieces of legislation. So, there's going to be so much work that needs to be done. And I know that there are incredible people out there doing it. And so I'm excited to see sort of what happens. But we need to make that distinction, just like Fidelity did recently in that publication they put out, that like Bitcoin is very, very different. Bitcoin should not be looked at in the same way. And Bitcoin is the thing that, Cynthia Lummis said on the Congress floor, like, thank God we have this. I mean, that's why, like, it's funny because we talk about such serious things and it's like doom and gloom, crash, whatever, but I've never been happier and more hopeful because Bitcoin exists. And I'm so excited. And all of these efforts are so positive because this is if we didn't have Bitcoin, think about it. Like, where would we be? I would have no hope for the future. It would be like a crash. And then what, people move on to gold or what? Like I experienced in my lifetime, yet another just like economic disaster zone. Like I lived through the recession, 0809. So I just really see a lot of hope in this, and we just need to educate the policymakers and the powers that be.
I want you to be able right now to speak directly to the biggest Bitcoin antagonist, Elizabeth Warren. What would you say to her right now if she's watching?
Hi, Elizabeth Warren. Thank you so much for the service that you've given our country over these last few decades. I would love to sit down with you and have a peaceful conversation, human to human, about Bitcoin. I would like to offer you a chance to ask any questions that you would like about Bitcoin and its energy use and its power to positively influence your representatives and empower them financially and offer a chance for financial inclusivity. Will you please offer us 10 minutes to speak with you, because I think you would change your mind. And I hope you have a great time on your next private jet flight.
Love that. Love that. We are going to make sure that that gets shared. Everyone watching, when you see this clip, make sure you tag Elizabeth Warren. We are going to ask her to sit down with Natalie Brunell and have this conversation.
She will not sit down with me if you leave in the last part. So don't.
we will cut that out. But
I'm a big believer that you attract more bees with honey, or what's that saying? Flies with honey, whatever. We got to be sweet. Look, these people are saying what they say because they don't understand. So I'm like, let's be nice. But I have, I've called her out because it really frustrates me when I see hypocrites in politics. It really does. Like, I know that so many of them went in with good intentions. In fact, I think Senator Warren did as well. But the system is so rotted at its core that it corrupts from within. And by the time that you're in decades, like it allows for just this inequality to fester. And I don't agree with it. It's not fair. Like, if you're going to be taking a private jet and getting upset about the energy use of Bitcoin. Like, we need to have a conversation about this. And if you're going to be day trading Google options and then banning something like Bitcoin or speaking out against it, we need to have a conversation, because this is ridiculous. And this is why our country's so polarized, because nobody trusts their elected officials anymore. And there's no place to look. We're like in this paradigm, within these walls. We don't know like where to venture out. And us Bitcoiners, we've ventured out. We have found the fertile land that we can plant a new world on. And so we're telling people to come outside and join us. So, you know, in all fairness, I would sit down very calmly and politely with Senator Warren, and I would just want to have a conversation with her, because she's wrong. She's wrong, and we're right.
I love, I cannot emphasize this enough. Kill them with kindness. Kill them with kindness. I continue to preach this, that we need to be more inclusive in this community. Not everyone is going to have the same libertarian mindset that the OG Bitcoiners did. I've definitely started to skew in that direction, as many of you know, I'm a big time progressive, big time lib, bleeding heart lib. However, I see the light, I see the wrongs in my ways, but I also see some right in those ways too. I want to talk a little bit now about like a fun story with you, because you brought up the private jets, and there was this news story that a young college kid, I believe he's a freshman in college, started tracking Elon Musk's private jet. And then he started to, essentially Elon Musk reached out to him and asked him to stop, offered to pay him. And the very smart student turned around and was like, you'll offer me $5K. Okay, give me $50K and a job at Tesla, please. Valid. So valid. Because you are a man, just like you said, so hypocritical for you to pound the drum of we need clean energy cars, green cars, yada, yada. Oh, but I'm going to take this private jet everywhere I go. I have no desire to figure out or solve what is frankly a larger issue. I stole this from Bill Nye the Science Guy, so it's a credible source, that plain fuel, rocket fuel, is actually using up and causing more carbon emissions than all of the cars that we use. So all the flying that I do is probably worse than the fact that I got rid of my car a year ago. But that said, like, how do we continue to allow this? I love the fact that we're calling out people who are on private jets. I know that you don't want us to include that bit, but we will. What are other just hypocritical actions from Congress people that you have the hot mic? Call someone out right now, please.
Well, I mean, we see it all the time. I mean, here in Los Angeles, you know, kids are wearing masks at schools, and we have all these mandates that will not lift, even though, you know, we don't have the hospitalizations to rationalize some of the intensity of these rules at this point in the pandemic. And we have Governor Newsom and Mayor Garcetti, you know, without their masks at SoFi, enjoying the NFL game in a nice box suite, celebrating with celebrities. It's like, did you go into office to serve the people or to serve yourself? And do you play by the same rules? You know, when we had the mayors who want, you know, they're taking away people's freedoms and making lockdowns, and then they're partying at clubs and whatnot. I mean, I just think the average person, I don't care if you're red or blue, like at all. It's not okay if you have one set of rules for yourself and the insiders and all the other bureaucrats, and a different rule for everybody else, because this pandemic has really exacerbated so many social issues, brought about so many mental health issues. Like, people have lost their jobs. Like, if you're going to say, oh, you have to wear a mask, then you better be wearing that mask everywhere in the stadium, because it's technically you were supposed to wear it in the stadium. So I just think that's ridiculous. You know, and it's funny because right before I left probably a year before I left my news job, one of my biggest stories was a story about political hypocrisy. And I'll never forget it because it like went viral and a bunch of publications shared it. We had an LA City Council president who moved to defund the police by like $150, $200 million. She was like, we need to take the money out. We need to, you know, we don't need as many cops. And I caught her having 24/7 taxpayer funded 2 police officers sitting outside her house at all times at the same time that she's moving to defund the police. So I went there and I'm like with my little iPhone and I'm recording, the 24/7 security detail. And I talked to them and I was like, hey, how do you feel about this? They're like, well, she's moving to defund us. And like, we have to sit outside her house, not just one person. We have to have two round the clock 24/7. When she walks outside, she doesn't even say hi to us. Like, in what world is that okay? And I tried to talk to her. I tried to go to her place. I tried, no comment. She didn't answer. The second that I started asking questions, the security detail was gone. It's like, why do you get a private security detail while crime is surging, 300%, but the average citizen doesn't get their cop? What? I don't understand. Am I just like being too altruistic that I would not do that? Hypocrisy really, really, really frustrates me. And we have so much of it today because the fiat system allows crony capitalism to breed. And it's like, oh yeah, you can blame the rich guy. You can be like, it's caused by him. No, it's caused by you incentivizing him. It's caused by you injecting easy money into the system and making it easier and easier for the rich to get richer and the poor to get poorer. So, and people, that's the problem, is they don't understand that basic concept in economics and like how money printing works. So, hypocrisy really, really, really frustrates me. I do not like it.
I want to take a quick moment to say thank you for doing real independent journalism, because we don't see enough of that. And you see the work you did made a direct impact and difference, and you saw change happen. So thank you. Thank you for doing incredible work. My hat goes off to you. So thank you for that. Gavin Newsom, fuck you. That's my soundbite on that front.
I tried to reach him because he like accepted Bitcoin for one of his campaigns in the past. And I wanted to see if he's still had it or like collected it, but I never heard back. So
I would like to highlight something as well, hypocrisy that actually happened yesterday in our state. I don't know if you caught this, but the movement for single payer healthcare was being put on the table. And this was a big movement by Democrats and progressives all over the state. This was a campaign platform that many Democrats ran on, promising constituents that this was going to get passed in the state of California. It was pulled off of the votes, and someone found out that over the last 2 weeks, private insurance companies have been flooding money into all of these Democrats' campaign. So, regardless of how you feel about that, I was horrified to see that was the result of something that was very important to the state of California, very important to voters, that they just don't care. And it goes to show you that their priorities are unfortunately not for their constituents. You brought it up. They lost the plot. Maybe when they started, they had good intentions, but a lot of them seem to be more focused on monetizing their fame, monetizing their abilities, and focusing on, who do I get to speak for after this? What trips am I going to get invited on based on company retreats that want to hear me talk?
I know the system's completely broken, and it allows, money in politics really corrupts everything. There's no consequences. Literally, the thing that I would always just marvel at when I was a journalist covering politics or campaigns, it's like these people fail up constantly. They could misspend money, and they could, just totally waste it. There could be complaints, and boom, they're reelected, they get a higher position, they get more salary, they get guaranteed pension. It's like, I just don't think that this would exist in a system that is based on actual hard money and an actual sound economy and real interest rates and price signals. And if we shrink the government and make people more accountable, I just think that, this is one of the things that Bitcoin hopefully will address fundamentally, because our system is so broken. It's really, really sad. And it attracts the most power hungry people. Just think about it. Think about what kind of people are attracted to becoming politicians today.
Totally.
Not a lot of great people.
No, I shout out my roommate freshman year, Samir Agrawal, who is genuinely one of the smartest human beings I ever met. Went to Harvard for law school after graduating undergrad as one of the top students at GW. And he is in Pakistani gentleman, and we had a conversation, just both being Middle Eastern. He was like, dude, when I was a kid, I wanted to be president. And as I've grown up, I've realized that's not a possibility in this country. And I'm like, but you are exactly who we need. Is you are the perfect person, everything. But regardless to that, I do want to talk a little bit while we still have you for a little bit longer about the conference. I know you attended last year. It was a great party, and I know that we have a lot of stuff. You'll be speaking at the conference this year, and maybe have a couple other things. We don't want to announce those, but just maybe share some things that you're excited about for the conference.
Oh my gosh, I cannot wait for this conference because it's such a full circle moment for me. I had started my podcast last year. I was collecting these interviews because I was so passionate. I was like bursting at the seams, wanting to share, the message of Bitcoin and talk to the biggest thought leaders. And I decided that the conference was going to be when I posted my first episodes, and I was going to go, and I asked your team for like a press pass because I was still a reporter and I had done some Bitcoin stories for my last network. And so I was just like super, ready to go, like totally green, nobody knew who I was. And to think like in just, it's not even been a year because the conference was in June. Just to think how crazy, like my whole life has changed. I went to that conference and I posted a couple episodes, and this space is so incredibly hungry for this information and content. And they're so kind and like supportive that I had people within those few days coming up to me being like, "Hey, you're the Coin Stories girl. Like I listened to your show." And I was like, "You found it already?" Like, it's like, there's 2 episodes up. And it was so nice. Like it felt so supportive. And I literally walked up to Michael Saylor backstage with my dinky business card. And I was like, "Will you come on my show?" He came on my show. I went to Saifedean's dinner and I begged him to come on my show because he was ignoring me, Saifedean. And he was like, "I'll go on your show." So my whole career basically, it started at that conference, and I'm so grateful for it. I met so many people and heard, on stage, these amazing thought leaders who are speaking to my core, to my heart. Like they want to make the world a better place through fixing the money. And I just love that. I'm like, I feel like I've finally found a community where, take politics aside, backgrounds aside, where you're from aside, like where you live, like at our core, we want the world to be a better place. We want to take care of the people that we love. We want to take care of ourselves and our families and our future families. And like, that's so pure and beautiful to me. And it, like, my family came here for the American dream from Poland. They know what it's like to grow up in communism. And they always dreamt that like this would be the place where if you work hard and you're a good person, anything can happen. And for the last 10 years, it feels like that dream has been slipping away. And through Bitcoin, I feel like we have a chance to renew it and make it stronger. Than the Bitcoin conference, like, represents that for me. And it's a great place to network. That like, you guys want me as a speaker? I'm like, what? I really appreciate that.
I mean, I love the fact hearing like the journey that, you pretty much started. It helped launch your career, and here we are.
Left my job 4 months later. Yeah.
I love that. I mean, look, I pounded that drum. Now you're hearing Natalie share exactly that. Going to the conference changed her life. It helped her work in Bitcoin. If you are watching and want to change your life and start working in Bitcoin, the conference is the place to be. You will shake hands and meet more people in this space than any other event around the world. Use code YTMAG to get 10% off your tickets. I also want to maybe touch on a little bit, going from attendee to speaker now. What goes through your mind? What are you preparing for to talk? Like, talk to us a little about that.
Yeah, I mean, I don't know. I think it'll depend on where we're at because things change so quickly in Bitcoin. It's really funny. The one thing I will say that has a lot of similarities to my last industry, my last career, I worked in news, is it's 24/7, right? So like I feel like I've been programmed to constantly be able to react in a couple seconds to a massive change. Like I used to be woken up in the middle of the night because some crazy breaking news event happened, right? And here we are in another 24/7 industry. And so it's exciting. It can be a little tiring, but I'm just excited to see, all the things we sort of talked about. What's the Fed going to do by that point? Will they have hiked rates? Will the market have corrected? Will we be in a rally melt up? Will we have a new all-time high? I'm excited to see all the other speakers, and just, again, like I don't feel worthy of being among them. I just, I do one thing. I like talk about Bitcoin. My skill set for the last 10 years is just speaking. some of it on camera, and I just want to share the message of Bitcoin. So if I can do that through this conference, I'll be a happy camper.
I should unmute myself and then I'll start talking. I love that. I mean, Natalie, I've been watching your content, watching your interviews on Coin Stories. It's been very informational for myself, continuing to learn. So thank you for continuing to do that. We need more people just out there continuing to share, because it's beyond just our network. I love the way that you approach it with empathy and compassion. Kill them with kindness. That's going to be the motto I keep saying to you, and we're gonna do it. We're gonna change the world by killing them with kindness.
Thank you. Well, I love your team so much. Thank you guys all for being supportive. And if there's, anyone else that I can help educate, like, send them my way, because I want to bring everyone onto Team Bitcoin, and you guys are just great. So thank you. I'm so excited for the conference.
I'm going to Elizabeth Warren, Natalie Brunell, that conversation is going to happen on Bitcoin Magazine Live, and it's going to be great. Natalie, thank you so much for joining us. Everyone, make sure to check out Coin Story. She's going to have an awesome episode coming out with David Hunter, as she's teased with us today. So be sure to check it out. She's had some great interviews there as well.
Thank you.
Thank you for joining us, Natalie. We're going to cut to a quick commercial break, and then we're going to have Dylan LeClair and the Deep Dive team come on to talk to us about on-chain analytics. Welcome back, guys. It is me, Critical Race Q, coming at you to talk conference. We talked a little bit with Andrew this morning about Sound Money Fest. We've talked with Natalie Brunell about the fact that she has gone now from attendee to speaker. In the matter of just 10 short months, she will have shifted into that role. I cannot emphasize enough how much this conference means to the Bitcoin community. This is sort of the place to be. This is our Super Bowl, if you will. Shout out the Rams for making the Super Bowl. I am not a Rams fan, but I always love all things LA. Make sure you use the discount code YTMAG to get your GA, Sound Money Fest, or even whale passes. I would like to correct something that was said earlier. You do not need to worry about bathrooms. However, if you would like to get a whale pass instead of a GA ticket, no one is stopping you. I would like to highlight, though, the industry day for a moment. The industry day is available for all those who have a whale pass and the industry pass. This industry day is going to eventually include some form of a job fair or opportunity for you to meet with people and businesses that are hiring in Bitcoin. I want to stress and emphasize this because I know not everyone here works in Bitcoin. I myself attended the conference last year and did not work at Bitcoin Magazine, nor did I even work in Bitcoin. I attended the conference with an eye on, let me get a job in this space. This is what I want to do. And here I am. You heard Natalie say it in her own words as well. My producer, Chris, followed a similar strategy, going to different conferences and found his way at Bitcoin Magazine. And even Alex McShane, his hustle to reach out to Saifedean and eventually get a job in Bitcoin and put his foot in. We talked about it a lot. The Bitcoin community is open. We are not closed off. We are not going to tell you you're bad or you have a shitty idea or whatever. We want to embrace all ideas and everyone here. So please feel free. If you even are slightly interested in working in Bitcoin, the industry day should definitely be on your calendar, and you should make a point to attending the industry day. Use code YTMAG to get 10% off of all your tickets. Joe Burrow does not love crypto. He loves Bitcoin. Not a valid source. Do not quote me on that. We'll be joined shortly by the rest of the Deep Dive team. But in the meantime, we do have CK Snarks with us. CK, do you want to maybe touch on a little bit about the conference? No. Okay, cool. I will continue to talk about the conference.
Keep talking, and I'm going to talk to people in the spaces.
Okay. Oh, that's right. For those, no, we want you here on YouTube. We will be giving out carrot codes. We'll be giving out free sats, as D348 mentioned. Right now, we've got 40 viewers. So that means there will only be 39 losers for the carrot codes that come out. Do not forget to buy your conference tickets using the code YTMAG. I will continue to pound the drum of, if you want to work in Bitcoin, this is where you need to be. You need to mark April 6th, Industry Day, on your calendar and make a point to be in Miami for this event. It will change your life. You've heard countless people share stories of how the conference led them to working in Bitcoin. YTMAG, 10% off. We will see you there. And now I'm pleased to introduce or reintroduce our favorite guests of the show, Dylan LeClair and Sam Rule, over from our deep dive team, as well as CK Snarks. Thank you very much for joining us, guys.
Excited to be here. Q, get on spaces.
I'm on the spaces now.
All right, y'all. We're gonna do this once again. We are simulcasting the deep dive. What is happening with Bitcoin's price? I titled it, "Will Bitcoin break 40K?" It seems as though we're battling with that resistance. And Dylan and Sam have been working furiously up until this very moment to get the monthly report done every single month. The deep dive produces a monthly report, and every year we do an annual report too, which they published last month too. So this month, the January report came out. I feel like y'all have to do like a book report every single year with it, or every single month with this thing. You want to talk about the monthly report a little bit before we get into some of the details?
Yeah, we put a lot of work into this one, specifically Sam, the last couple of weeks, but really the last couple of days. We recently got kind of our own chart layouts and everything, and have been actually formatting the data ourselves. And so this monthly report looks fantastic, all custom charts with macro data, on-chain analytics, Bitcoin derivatives, all custom formatted, kind of the way we want it. And so we put a lot of hard work into it, and excited to push it out in basically like an hour or so. But I guess listeners get a sneak peek.
Sam, you want to jump into this? What is it like to get a monthly report done every single month? Like, how much work goes into that, Sam?
Yeah, can you hear me okay? Good. Yeah, this one was a little bit more intense. We're trying to do a lot of different product improvements to the deep dive. Just as a caveat, we're going to be sending out this monthly report today to deep dive paid subscribers. Gonna have it open to everyone in a week. But yeah, I mean, we've been always looking at a monthly report. It takes a lot of time. Takes an extra week of work for us to put it together, go through all the things that we find important and interesting, and kind of cycle through all that signal and noise. But yeah, this time in particular, we're trying to make everything custom, in-house, a little bit more unique, a little bit better product and value. So more intense this time around. Definitely less sleep and more caffeine, but we're excited to release it and kind of get feedback on it. And it's a pretty iterative process for us to see what people like and what people don't, and then kind of go back and make another one next month. So we're stoked about it.
I guess before we get into the programming, Dylan and Sam, we were talking about the monthly report. Do y'all want to introduce any new viewers to like the general concept of the deep dive and what you two work on every single day?
Yeah, sure. I can just rip it off real quick. I mean, deep dive is a Bitcoin centric or Bitcoin focused product, but really what we're trying to do is like, along with our kind of, I think someone's speaker's on. I'm hearing a little bit of an echo. Sorry to. Not sure about that. Okay, yeah, like we try to combine our Bitcoin thesis that it's the best money ever with more of a intermediate and sometimes shorter, but often like longer term analysis to how it's actually unfolding. How are these monetization bubbles? Why are they happening? How are they happening? And looking at everything like this with this transparent monetary network in a probabilistic lens. That's what we do. And with this next report, I think the visuals are also going to be really, really appealing. People just want to know what's going on. And even though we often encourage for most everybody just steady average accumulation and hodling through volatility. We like to outline, why that volatility is happening and analyze it and crunch the numbers and put in some nice visuals. So we combine stuff across on-chain, derivatives, macro. We like to really keep readers informed, and so we do that on a daily basis, about 20 a month. So we put in the work.
All right, awesome. Well, I guess y'all want to jump into some of the agenda items. I definitely would love to break in and talk about price. Obviously price dumped in the last few weeks, and this week has been rallying, but it does seem as though, from an untrained eye, that 40K is acting a little bit like resistance. I'm kind of curious what you two think. I'm curious what Q thinks, because I know that he spends a lot of time with the charts. So let's go to Sam, and then maybe Dylan, and then Q can give their thoughts on the price action.
Yeah, sure, definitely. Kind of when I'm watching price action and what's going on over the last few weeks, last few months, to me, it's seems tough to not look at it with equity correlations and what's going on kind of in the risk on asset space. So I think now what you're seeing is, the SPX, the S&P 500 index is, bouncing up 10% now from the lows, from kind of where it bottomed, and it's getting right near that kind of 100-day moving average. Seems a bit overbought on the latest move. At the same time, you're kind of seeing the dollar index, the DXY dollar, as a relative to a basket of other currencies, falling at the same time and looks oversold. So I think you've seen a bit of a rally from Bitcoin at 33,000, but a bit of rally in, ARK, SPX, NASDAQ, however you look at it, they're all correlated in the same way. So I'm still pretty cautious in terms of like the upside price in the short term, without seeing, kind of much more strength on the equity side of things. And just today too, you're seeing ARK down another 5%. So I think in times like this, there's a divergence when I think about it. It's like so many bullish on-chain pictures, fundamentals that we can talk about. But Bitcoin doesn't trade next to its fundamentals a lot of times, and a lot of times based on liquidity, which is not a full bullish picture for me in my mind right now.
Yeah, well said, Sam. I think, what we look at and what we laid out, I think really well in our monthly report that we're putting out here. The demand side has been extremely strong basically since the fall. And on-chain has gotten a little bit of like hate because they're saying, price, everything looks strong. You're like saying stuff like supply squeeze, but the price dumped. What happened? And like, more so like the last 672 hours, the last four weeks, 28 days. What's the correlation between NASDAQ and Bitcoin? It's 93%, 0.93. So like it's tick for tick, Bitcoin and the NASDAQ for the last month. And so, and the derivatives we've gone from being like pretty damn bullish at the all-time highs, futures ETF launch. There's going to be a ton of capital flowing in, but it's through a derivatives product, the futures ETF at the CME, to now basically all the macro funds that bought in 2020 and 2021 are selling. Marginal sellers, Grayscale blows out to a 30% discount to net asset value. It's just more marginal selling than marginal buying, and that's it. It's just like it's a liquidity game, and Bitcoin's as a monetary asset is being treated exactly like, the ARKs, the Teslas, it's just a liquidity wave, and a lot of to certain capital allocators. There's obviously people in the audience, and myself included, that are accumulators regardless because it's the best money ever. But over the shorter to medium term, like if the Fed takes the liquidity spigot away, that's the game, right? And so, the market's going to react to that. And as a Bitcoin accumulator, as a stacker hodler, that's your long-term opportunity.
I agree wholeheartedly. I mean, I won't even try to pretend like I know half as much as these two. I read everything that they put out and sort of base what I see off of that. The thing that I've been paying most attention to, as Dylan just mentioned, is there's such a high correlation between the NASDAQ and Bitcoin price. And the last time that we saw something very similar to this was around March of 2020, when we saw a full collapse of the stock market. At the same time, we also saw Bitcoin price drastically drop below 5K for a brief moment. And then slowly we saw that as the Fed was pumping money into the stock market, and the stock market started to correct. Slowly but surely, Bitcoin started its rise up. And it wasn't until about, I want to say 9 months later, once the Fed really started pumping money into the markets, did Bitcoin really start to break into new highs at that moment, breaking out of sort of the 10 to 12 range, reaching out above 20K, where we've been comfortably above now for over a year. I am more concerned about where our floor is right now. I have brought up in the past and will continue to treat 28,000 as sort of my floor safety net. This is a price level we've tested 8 different times over the last 2 years, or last year and change. And so long as we continue to maintain above 28,000, that will be a floor price. Thesis change the moment we break below that and have a long period below that. But that is sort of where I'm paying the most attention to as far as how much lower we can go. But I will sort of lay it back to the two of you and sort of ask, what are you seeing as far as these leverage games? Dylan, you post repeatedly on Twitter. Please, for the love of God, you crazy animals, do not do this. Do not go over leverage. I mean, we had a nice little David Bailey post talking about leveraging your Bitcoin buys. What is it? What are you guys seeing out of the leverage space that's really driving this price down? I know, Sam, you touched on that, and Dylan as well.
Yeah, I mean, I think, in general, leverage isn't a good or bad thing. It just is. And it's a natural progression of Bitcoin as, a monetary asset. It's going to become financialized. And it always was. Ultimately, the thing that's different between Bitcoin and then, any sort of monetary asset or collateral type in the world today is that it's UTXO set 21 million. You can't fudge that. That's the arbiter, that's the arbiter of truth, So counterparties, like margin calls, all that stuff. It's a free market. And a lot of times, not your keys, not your coins. There's been times when exchanges run away, but disregarding that, if we're just talking about exchange rate counterparty risk, right? Like, embrace the volatility, because there are no bailouts there is no lender of last resort like there is in the fiat economy. And so unwinds are going to be vicious at times. If everybody continues to margin their Bitcoin to get more dollars, and oftentimes to buy more Bitcoin, then especially with a disproportionate amount of your stack, just full disclosure, over the last couple of weeks, I've margined, I collateralized some Bitcoin, and I've been buying a little bit more every single hour as a result. But it's not on a leverage perspective, it's not probably more than 1.05x my if you're talking about just mark to market leverage. And so the people that are making trades with conviction with their entire stack that Bitcoin won't go below 50,000 at all-time highs, well, they probably lost their coins, and so that's fine. It's just, don't make those mistakes. And so right now, leverage, futures market, it's the most neutral it's been in the perpetual swap market. It's the most bearish it's been since summer of 2020, summer of 2021. I'm sorry. But we're not, I wouldn't say it's ultimate bottom at the moment, right? We're looking at, just look at the NASDAQ, look at the S&P, and you don't even have to look at the Bitcoin chart probably for the next couple months here as, hodlers accumulate under the surface and ultimately set that kind of spring for another rally when that liquidity spigot turns the other way, because we know it will at some point.
Yeah, I would just add too, Q, you were talking about just, price kind of levels. If we're going to get a little bearish here, talk about the downside potentials, because, it can go in any way. There's no crystal ball for us here, but interesting levels from on-chain outside of the 28,000 piece is the realized price, cost basis of the market, right around 24,000 right now. Another key level is we break the market with some help from Glassnode down to long-term holders and short-term holders. The long-term holders really haven't been tested in a lot of these drawdowns over the last year or so. Their realized price is in that $17,000 to $18,000 range. And if you're looking for downside potential all the way max pain on that side, in cycles, we've seen that tested where the price tests that long-term holder realized price or gets close to it. So there's still potential for that. We've seen a lot more maybe capitulation type behavior in short-term holders, but apart from that, just from the price getting to those levels, those might be some interesting to watch from like a downside perspective. On the flip side, almost all of the on-chain metrics that we track in terms of long-term accumulation and what we're looking for is really positive, but that's more of a multi-year look in 1 year accumulating Bitcoin. And one of those tweeted out today is just a little refresher on the Meyer multiple price over 200-day moving average. Been a pretty useful, simple tool for all types of investors that use that 200-day moving average to look at when price over the long-term history is really attractive on an accumulation basis. And when you look at that metric today, it's getting to a point as low below this like 15th percentile that we kind of do in some of our percentile analysis around different metrics. But it's only been that low in the COVID crash, pretty much kind of a full bottom in 2019. So it's pretty rare moments for something like that to happen. So yeah, a lot of interesting action with the price, but really relates back to just where the macro market is going to go over the next few months.
Sam, I'm really glad that you brought up the Mayer multiple. For me, that's my go-to metric, not because it's better than other metrics, but because it's super, super simple. And really the whole point of the Mayer multiple is you take the current price and you divide it by the 200-day moving average price, or the average price over the last 200 days, and it gives you a multiple. So whenever it's below 1, so AKA the price is lower than the 200-day moving average, that's generally a buy sign, especially, statistically speaking. And they break this down statistically across, the different multiples and like the chances of the price or the time spent of the price higher than that price point. And it makes it really, really clean and obvious when are buying opportunities and when, Bitcoin is relatively expensive. So, I mean, if you only stack based on the Mayer multiple, you're doing pretty well. That's not a bad investing or saving strategy. Personally, I just buy all the time, but I really do like to use the Mayer multiple as a way to explain to people. If someone's like, hey, should I buy Bitcoin right now? I usually am like, well, the Mayer multiple is like 2. So, I think you should get skin in the game, but, just know that it is a little on the expensive side right now. And, you want to be buying when it's lower. That's kind of how I frame it. I know Q wants to say something. I do want to, give a shout out to the 500, 600 people in Twitter Spaces. I pinned at the top the YouTube link. We are doing this live on YouTube and we're giving away sats on YouTube. I know a pleb just won some sats on YouTube, and I believe we're going to be showing some charts over on YouTube. So if you want to see our faces, if you want to see this with charts and potentially win sats via the Carrot app, go over to YouTube and click on that link in the nest. But yeah, I'm going to pass it back to you, Q.
I also very quickly want to shout out, I did not ignore the Twitch fam. Shout out to those who are watching on our Twitch stream as well. You guys, I did not mean to ignore you. I appreciate the call out. CK definitely mistook me taking notes on everything Sam said as me having the next question. But I do kind of want to talk a little bit about, Sam, thank you for helping me lay out some areas of support for me as well as our viewers. Talk to us a little bit about upside resistance that you guys are paying attention to. We talk a little bit about some of the different indicators you guys like to use. I don't know if you want to dive into the charts this second, or if you want to just sort of talk about what are price levels above us, some of those indicators you use that are sort of price resistance levels.
Yeah, I guess I can start. I think, just from like a technical standpoint, looking at any chart of an asset is telling in terms of like resistance and support, that price is the ultimate kind of truth. And so, just like the technical levels on the chart, but I guess more than that, I think just thinking about how relatively like overheated derivatives are, how, like there's always one short for every long in a futures contract, but what you have to look at is collateral type. So our traders margin longing their Bitcoin with Bitcoin as collateral at all-time highs after going parabolic. We don't want to see that. So collateral values right now, it's the lowest it's been in a year, and maybe all time. Our data doesn't go back that far, but it's 39% of the futures market is collateralizing with Bitcoin or crypto. The rest of it is stable coins, which is really, really healthy for bulls, right? Because there's no convexity during downturns where your collateral gets wrecked and your position gets wrecked. And then if we're just looking at like the futures basis, right, that 3 months out, there's that a futures contract, and relative to the spot market, what's the basis there? And you can annualize it. So annualized right now, it's at 6%. In the March or the April 2021 at 64,000, it was at 48%. It top ticked and it hit 20% at the September, November all-time high. So really, really low there. Good to see. In terms of perpetual futures funding's been negative on average for last week. So it means that if you want to enter a derivative contract on Bybit, Binance, BitMEX, whatever the exchange, FTX, you, depending on the contract, you can get paid you get paid a percentage of your notional position size to be long Bitcoin. And right now it's not really, it's like you get paid 3% annualized. It's a really, really small number, but shorts are paying longs to sit in positions right now. So in terms of derivative market positioning, it's honestly it looks really healthy. So like in terms of actual resistance, I'm not quite sure, but usually the resistance is the leverage is there. Traders are levering up and really getting derivatives is getting offsides to the upside, and the spot inflows just aren't there. Right now, what we've seen is that the club is like the supply is completely loaded, and that club of demand since November just hasn't really been there. It has actually been net marginal sellers, and derivatives have kind of unwound, and it's made that a little bit more like vicious. But if we don't see the VIX blow out, if legacy doesn't melt down, then ultimately like Bitcoin's pretty primed to trade well. I mean probably some more consolidation, but really all of the sellers that would be like major support have gotten out if they wanted to over the past couple of months. So when that demand, I keep repeating myself on this topic, but I think it's really important to grasp is that like the supply side looks fantastic, and really it's just marginal sellers for the past couple of months. But the same crowd that's panic selling now and trying to run out of the burning theater is going to come back, and they're going to come back a lot bigger size, and they're all going to try to do it relatively at the same time, which is when there's a Fed pivot. Not if there's a Fed pivot, but when. And so like resistance in that scenario doesn't even really matter all that much because, there's just that much demand. And I think we might have to wait out for that scenario to occur, but it will. And you don't want to be short at that point.
I want to present a question to you both. Sorry, I know Sam, you're about to go on a roll, but you brought up something really interesting about the fact that essentially shorts are paying longs to take a long position in Bitcoin. When has this ever happened before? Can you give us examples? And if this has never happened, does this potentially become a contrarian indicator where you have the bears overly bearish to where all of a sudden the bulls are going to start coming in and driving the price higher?
Yeah, so I mean, the perpetual swap funding is essentially just a way to keep the spot market and that futures contract market, because ultimately what decides the price of a perpetual futures contract? If I can get 100x margin and I'm just the biggest whale in the room, well, I could just send Bitcoin to infinity, couldn't I? And the reality is that premium is calculated, or that funding rate is calculated based on the premium or discount relative to the spot market price. So right now, essentially what we've seen is that derivatives, like everyone got bearish, Bitcoin sold off. And then the past weeks, the spot market has rallied more than derivative traders have positioned themselves for, right? They're relatively positioned to the downside relative to the spot price. So that funding rate is negative. So shorts pay longs. And oftentimes it's the opposite. And actually when it's right in the middle, there's meaning the spot price is exactly that contract price. Then longs pay shorts. Essentially, you're paying like an interest rate on your money, and it's like 10% a year. So it's like moderately positive. So it's basically like, because what is a futures contract, and like what are you getting access to? You're getting access to margin. You're getting access to capital. So there's an interest rate, and those interest rates are paid not to the exchange but between traders. And so it just acts as a way to tether. In terms of when we've seen it, we saw it really aggressively this summer. But like honestly, it was that Binance USDT contract. It was the Binance traders margined with Tether were aggressively shorting Bitcoin into the ground. Well, if you short Bitcoin with dollars as collateral and Bitcoin rallies, you're gonna have a tough time. So that's what we saw. We also saw after the March COVID crash, derivatives were aggressively under the spot market. for a long time because there was so many liquidations and everybody just got massacred. So for a while, like you could have just gotten paid for months on end to just sit in a long Bitcoin contract following the March blow up. And so like these sort of things, these dislocations, they don't arise much. But if we see even more bearish price action, I think traders probably get even more offsides. And that's when, that's when it's really attractive to have access to some of these products that we don't have any access to in the US, which is a bummer.
Sam, you want to jump in?
I can add a little bit more to that. Dylan is a killer when it comes to talking derivatives markets and what's going on, especially in the perps funding market. But yeah, I mean, it's a chart that we've put out a few different times, got some variations in the monthly, just a nice color-coded chart on price to show you those extreme dislocations, probably about 4 events over the last 2 years where either the market was too levered long or too levered short. And right now in that type of neutral state, it's very rare, might need to see in terms of, more capitulation, more selling for, a lot of more shorts to start stacking up in terms of sentiment with the market. Usually those short positions really stack up when market sentiment, is at all-time lows. So, we're watching that, seeing a little bit build up, but not near as the levels that we saw either in the summer of 2021 or in the COVID crash of March 2020.
For anyone interested, I just pinned it to the top of my page. So it's a link to the deep dive, but as well as kind of that graphic that we're talking about, that perps funding rate. Just take a look at my Twitter account. It's at the top. That's what we're talking about. And you see often like if you look at that funding rate after huge price spikes or huge price dumps, liquidation events, like May 19th, Bitcoin was down like 20-something% in an hour at one point. What was happening? It was a mass liquidation event. And what did funding do? It was like, it had its biggest negative print in a long time since like the COVID crash. Well, why? Well, because the derivative market, the perpetual swap market was that far deep under the spot price, right? Because Bitcoin doesn't have a price. It has local exchange prices all over the world. And they tend to be extremely close to each other because there's financial arbitrage opportunities. But when these huge blowups happen and like everybody on a certain exchange just gets absolutely their face ripped off, there's like, dislocations, arbitrages that exist that, can be pretty attractive over the short term. Like for instance, sometimes when there's liquidation events, you can buy Bitcoin 3 months into the future. Like for example, if there's like a July futures contract of Bitcoin and there's a Bitcoin drops to 30K, well, that futures contract could trade at 28,000. Like it could be below the spot, which doesn't make sense, but it's just because there was a huge blow up on a certain contract or exchange or whatnot. So, that's just an example, but that's why you see these things happen. What's happening is there's either in derivatives, there's forced sellers or forced buyers. And it's because there's all margin trading and these certain dislocations can occur. So that's what we like to cover in the deep dive is like why these things happen and what they mean, because we understand there's some complexity to it.
I definitely want to make sure everyone takes a moment to go and look at Dylan's post, because I mean, the amount of knowledge that these guys drop, the amount of work they do on all their deep dive posts, like my hat goes off to you guys, and thank you guys for all of that, because I learn a ton. So it makes a difference to one person. So thank you for that. I want to present a question from our YouTube audience. Those who are tuned in on Twitter Spaces, feel free to pop over. Feel free to populate questions in that comment, and we will ask Dylan, Sam. We've talked about this in the past, but can you maybe talk a little bit about this correlation between Bitcoin and the equities market, and maybe some catalysts for ending that correlation, or how long do you guys foresee that continuing with the Fed rate hikes as well as scaling back asset purchases?
Yeah, I can start and share some thoughts. I think probably where it started to get kind of to its highs, come back in was like post March 2020 pandemic, crisis crunch, right? And then, everything trades in tandem then, and Bitcoin and the SPY, like SPY, trade fairly close from there on out. I think in the matter of it, it's a $1 trillion asset. And you have to, although as a Bitcoin accumulator, someone's working around Bitcoin, I think of it as a risk off asset. I treat it that way. I'm looking long term that way. But I think the institutional capital that's coming in the market now, it's more of a risk on speculation type asset for a lot of people. And it's going to act that way until I think you have way more institutional flows come in. Let's say it's $1 trillion today, maybe the point is 4 or 5 trillion where it really starts behaving like its own asset class. So I think there's like a fundamental nature there that it just has to grow. And you have to see more papers like you saw from Fidelity Research come out and go into hands and start thinking about the asset in a different way and how people allocate to it. In terms of catalyst, I mean, I think the main one that everyone is trying to understand is the Fed pushes out their tightening policy cycle as they, try to commit to doing that. Will there be some type of reversal in monetary policy tightening that you saw in like 2018? And liquidity has to come back in the markets. I think that's the biggest one. A lot more rumors about, nation states coming into the market. I think there just needs to be more kind of staple, whether it's institutional flows or nations taking on Bitcoin at large scale, to just start differentiating to the market that this is something completely different than maybe just risk on speculation, 1 to 2% in your portfolio.
Yeah, no, I wanted to jump in on like Bitcoin's place as an asset. I think, Sam, you are 100% correct. And I've had a lot of conversations with the great Bitcoin Tina on this exact topic. And he really correctly pointed out in late 2019, early 2020, that Bitcoin was going from an illegitimate asset in the eyes of asset allocators to a legitimate asset. But again, Sam, I think you're completely correct. Bitcoiners, we treat Bitcoin as a risk off asset. We think 21 million is like the ultimate conservative play, but all of these capital allocators treat it as actually a hyper risk on asset. So I think where Bitcoin lives in terms of the minds of most people is not, illegitimate, but it's not conservative. It's somewhere in between a legitimate risk on asset. That's where Bitcoin lives right now. Bitcoin is in that legitimate territory where people will actually allocate to it. Serious businesses are starting to tether their name to it. But for the minds of most people, the mind of most capital allocators, it's still a risk on thing, even though Bitcoiners don't see it that way. Does that make sense?
Yeah, well said, CK. I guess what to think about is what happens, right? So we had the March 2020 unwind, and the Fed's gonna try to taper. We know that. We're all saying it's gonna blow up. There's a pretty good chance that it doesn't blow up right away. I mean, maybe they get 12 months of somewhat normalization. There is a lot of liquidity in that reverse repo. If you see the reverse repo facility, there's $1.5 trillion sitting in that. Basically it's Wall Street capital that they didn't bank reserves, they didn't know what to do with. And so instead of basically buying short-term debt, because with the way that debt works, the way that bonds work, or treasury bills, treasury notes, treasury bonds, long duration assets, say the 30-year treasury, it has duration risk. Essentially, if there's a high inflation print or just yields rise, there's the principal value of that bond gets absolutely decimated. So a lot of money doesn't want to take on duration risk, and you can't go put $1 trillion in a bank account. I guess it's technically bank reserves, but they don't want that duration risk. So, they want to get some yield on that money. And so instead of buying treasury bills or treasury notes, the short end of the curve, because there's not a large supply of those, it would send the actual yields on those notes nominally negative, meaning that it would have a negative yield. So the Fed spun up this reverse repo facility and is basically paying, I think, 25 basis points or five basis points on all of this capital. Long story short, what that means is there's still a kind of a good chunk of cash, actually a huge chunk of cash, that's just sitting on the sides and doesn't know what to do. Because here's the thing, is that the Fed bought all this debt and handed the banks cash. And then inflation went to 7%, and yields were like tiny, and banks said, I don't know what to do with this. I don't want to buy mortgages. I don't want to go out on the risk curve any further. And so like the Fed could probably taper or raise yields 50 basis points or 100 basis points without everything like totally blowing up. Yeah, we're seeing like ARK and like some garbage tech and Bitcoin actually sell off right now. But the reality is, what happens when that all unwinds again? Because it will, with the way our system works. 400% debt to GDP, 120% federal debt to GDP. We're in a debt spiral, and we can't get out of it. So how long that clock ticks, who knows? But just when it all unwinds, they have to respond again. How much Bitcoin is out there actually for sale? And hopefully you have an allocation already.
Y'all, I think fantastic analysis, Dylan. I feel like, a lot of times you hit on a lot of the same themes, and really that's just what it is for long-term thinkers in Bitcoin. It's just about, this thing is going to go up more in the future, and it's just about accumulating when you have the opportunity. I want to talk a little bit about the Bitcoin conference. Y'all, we're working really hard to put together the ultimate Bitcoin event, 4 days of insane Bitcoining together in Miami. I think the line that I've been using is like, nothing makes Bitcoin real to the world more than 30,000 people coming together and like showing the world, that one, we're not afraid to gather, and two, this many people care about Bitcoin and just Bitcoin to come together and celebrate. And it is going to be a celebration. So I'm really hyped. It's going to be 4 days of Bitcoining. The final day is a motherfucking music festival. There's going to be comedians. There's going to be a art museum and gallery all 4 days. And there's just going to be tons of Bitcoiners doing Bitcoin things. So you're going to want to go. YTMAG is the best promo code. That's 10% off YTMAG. So use that promo code and get your tickets at b.tc/conference. See Dylan, see Q, see Sam, see myself, see Alex and the rest of the crew all at Bitcoin 22. I also want to shill YouTube. If you are on Spaces, go to YouTube, click on the link. I think it's the fourth. It is the second pinned tweet inside of the nest. Go click on the YouTube link. Check it out there. We're going to have charts right now, and we are still giving away Bitcoin on YouTube, and I guess maybe on Twitch. I don't want to leave out the Twitch people too. We have twitch.tv/Bitcoin. But yeah, YouTube is the place to be. And Dylan and Sam, do you want to tease a little bit of some of the things inside the monthly report? I know the January report is about to drop, and we haven't even talked about that yet, and we've been going for about half an hour.
Yeah, sure. I mean, we've been sharing some of the main ideas, but we can probably share the charts. The screen share here, I guess. Yeah, just kind of give some context to what we're actually talking about. I'll formally present. One sec.
While we wait for technology to catch up to the speed of Dylan's mind, trust me, I know the struggle, my friend. Talk to us a little bit about some of these regulations that are coming out or being announced, and what effect, if any, have they had on Bitcoin price? For example, when all this news started buzzing around Arizona, did you guys notice anything out of the ordinary with regards to Bitcoin and anything on chain?
Let's direct this to Sam.
Yeah, sure. I mean, there's probably some, if you dig down into like the small price charts, minute, 5 minute, hour candles, you can probably see some movements in terms of maybe algorithm trading, buying, stuff like that. But I find it like pretty just consistent right now with what a lot of states have been doing or trying to do, find ways to promote Bitcoin policy. So for me, I kind of see it as maybe more of a market, like normal event kind of taking place, maybe not something that's like newly priced in that's fully going to change. I think most people are probably still waiting on some kind of federal regulation policy if that ever is going to come, to separate what Bitcoin is from other cryptocurrencies, crypto assets. So nothing in the price that I saw jump off. Obviously, it's incredibly bullish long term to see states start to take actions kind of before the federal government on a lot of these policies and regulations that they're putting out.
Usually any like kind of news related price action, whether it's like, you know, some company that like fake bought Bitcoin for the treasury and it was just someone trolling on Twitter, right? Like, and you see Bitcoin pump like 3%. It's like all derivatives. And like, so usually like the net kind of like actually like, you know, the net result is you usually see like a Bart candle or like we were watching like 1 minute charts with Jerome Powell speaking, but it was like all the volume, all the actual like size was margin. It was perp traders, derivative traders. So like really the spot demand, like if you remember like Michael Saylor announcing he was going to buy $1 billion, $1.5 billion, or like the first real big debt raise he did. Or they announced that you were going to buy 500 million more in like a week. And Bitcoin is at like 11K and then it dumped to 9K. And everyone was like, what is going on? Like all these buyers are expecting $1 billion to come into this market. That's like, you know, it's like 250 billion and the price dumps. What is going on? Is like the market not efficient? And the reality was like a bunch of derivative traders were just like over leveraged on the news that Saylor was buying, and some smart whales came in, sold and got them liquidated and got cheap coins. So like, you know, news dependent price moves really aren't all that telling, and more so it's just kind of like those underlying like stackers that are relentlessly stacking every day, you know, like long-term holders, you know, supply last locked up 1 year, 2 years, whatever, the stuff we can actually see on chain. Like, yeah, that's what really moves the price over the long term. And that's what matters, you know, more so than like derivatives.
So Dylan, you're sharing a couple of charts here on YouTube. You want to walk us through what we're looking at?
Sure. Yeah, this is just so percent supply is last active 1 year, 5 years ago. This isn't. It's just more of a cool kind of chart to see. We see with the 1 year, it's much more like cycle driven, where we can see this accumulation take place. Currently, 59.5% of Bitcoin haven't moved in a year or plus, a year or longer. But that's just kind of one of the things. We don't really put too much signal into that. Here, I guess I'm looking at the GBTC premium discount right now. Right now at minus 25%, touch almost like minus 30, I think last week. But this is like, we've re-emphasized this in the deep dive a couple of times, that this discount with 650,000 Bitcoin, or I think like 640,000 something locked in the trust, traded on OTC markets that aren't very liquid, but a lot of the, say, like macro allocators or pension funds or any kind of person, especially in the US, any entity that's really has interest in big Bitcoin exposure at the moment, probably has the optionality to buy grayscale Bitcoin trusts, as well as go to a Coinbase or go to wherever they would receive spot exposure. And so when the discount's at 26%, and it's like, you know, not too liquid in the sense that like, you know, it's trading 24/7, 365, and it's trading OTC. So it's hard to get your hands on a lot of them, but like it's at once, unless you're like with a certified broker, but like you can get exposure, you know? And so with this discount at 25%, it's siphoning away spot demand for the moment. And that's fine. I think one of the things you'll want to see as Bitcoin, you know, the bull market develops, or you know, the next one forms, is this discount closing into that net asset value a little more. And maybe that spot ETF is a catalyst. So here's the total: 643,000 Bitcoin held by Grayscale. Here's one we like to look at. This is the cost basis ratio of long-term and short-term holders. So why does Bitcoin go up? It goes up on the marginal seller becoming exhausted. So if we look at the cost basis ratio of short-term and long-term holders, we can really see the bull and bear markets like almost perfectly. When short-term holder cost basis is increasing relative to long-term holder cost basis, what it's saying is that long-term holders have cornered the market, and new capital that's interested in entering the market for whatever reason, whether it's, you know, cypherpunks in 2012 or drug dealers, or retail that's interested in 2016 or institutional capital and Michael Saylor in 2020, if they're interested in coming into the market, we're going to be able to see those UTXOs, if they buy any, being transferred. And so when that short-term holder cost basis is really bidding up aggressively, it's just we know that's because they're competitively trying to acquire a fixed amount of coins, and like that free flow is pretty damn small. But when that ratio is going the other way, when short-term holder cost basis is decreasing, when the market's basically underwater, that new money, we see like capitulation losses and that long-term holder accumulation. So with this metric, with this ratio, which if you look maps almost like tops and bottoms throughout its history, like very, very well, local tops, that is, it's because of this kind of dynamic of accumulation and distribution. We can see these capital inflows on chain. And so right now, a lot of losses. Basically the entire last year of capital is underwater. So we're seeing kind of a accumulation, and some of those losses are being realized. We can see, coins that last moved in April are moving today, for instance. That's just one example. And so that's kind of one of the cool things we can see with on-chain. And right now we're in the midst of a reaccumulation. So if you're accumulating right now, and you're a future long-term holder, consider yourself the smart money. Sam, any others we should show? Which ones do you like?
With that, we can just go over the long-term holder kind of accumulation. I think we've got the color-coded chart in here based on a 30-day percent change. But yeah, kind of Dylan mentioned, we've touched on before, right? There's these periods through Bitcoin's price history where, long-term holders versus short-term holders are accumulating or distributing Bitcoin. And right now, over the last month, we've entered into what looks like kind of a trend forming period of long-term holders accumulate. So we just look at the supply that is in long-term holders, or is moving, getting past this 5 to 6 month range of not moving to become long-term holder supply. Starting to see that increase quite a bit. And kind of when that happens around price, price can consolidate, it can range, it can even hit, more downside based on, this accumulation happening. It doesn't necessarily say where, maybe price is heading next in the start of this trend, but it shows you when people that are long-term convicted about Bitcoin are really adding. And so now, got the bottom chart here where we just show that 30-day percent change. And so that's been climbing up, which is honestly, when you look at it, it's a behavior that's happened time and time again in Bitcoin's history. Long-term holders just accumulate Bitcoin at good prices and smart money moves in. And it's no different even within this macroeconomic uncertainty. Previously, we did see kind of long-term holders distribute or sell into kind of this falling price. You can see that in like November, October, December. So that was kind of an oddity, very much seems to be related to macro selling, but that's kind of, fallen off and things are changing. We don't have it in here as well, but we put in a deep dive that we had last week. What's interesting, not only are, we're seeing long-term holders accumulate, but at a high aggregate market level, we don't like to be too granular at this because some on-chain, you have to take a high level view, especially when you're estimating what whales are doing. So when we look at whales versus retail groups, whales over the last 2 weeks have been net adding to their supply. So there's a lot of different ways to define it. We kind of outlay it in one of our recent deep dives, but that's a good indication that, when we're seeing price drawdown at the levels that we've seen. So we can look at it at like a 30-day percent change in price, or we can look at it as like a major drawdown from like cycle top, cycle low, whatever you want. It's a good risk reward trade-off in terms of where price is today. So when like you have this huge explosive move and 30-day change in price, going down like over 15%, it doesn't always mark a bottom, but it does mark good times for investors out there to say, when are you going to accumulate Bitcoin? Well, you don't want to do it at that 50, 60K range if you think that's the high, but when price has these explosive moves to the downside, it looks like the time to accumulate. And that's what we see with whales doing over the last 2 weeks. And, we'll have to see how these accumulation patterns play out. Take it with a grain of salt because it's estimating kind of individuals and institutions with large balances. It's estimating entities around different addresses. So I like to take a more aggregate view, but usually this is a pretty positive sign when you start to see more whale accumulation moving in here. And so Some of this could easily have been MicroStrategy buying in, obviously, over the last 2 weeks is what we saw there. So, and then you see some other buys. You see, Purpose Bitcoin ETF out of Canada adding a lot. Yesterday had some of its biggest inflows. So some of those events kind of just help us confirm when this accumulation is happening, but it's a good thing to keep an eye on.
I think that the most aggressive moves when you're like looking at just the recent 5-year history of Bitcoin has been when you see these huge accumulation patterns take place over not like days or weeks, but months, quarters on end, with price drawdowns, consolidation periods, and you see basically anybody that's been in the market that's been a bear. So for anyone that's been in a bear for the last 2 months, trading derivatives, whales, trading spot, whatever, and they've been rewarded. All right, so they've got a lot of capital and they just have a huge bias. Maybe they got lucky, maybe they're good, but usually they try to take it like too far. And you see, same time that this like long-term holder accumulation is very strong for months on end. Maybe price starts to trend upwards a little bit. That sellers becoming exhausted, derivatives fade the rally. And so if like you look at the March 2018 bottom or 2019, that like 3K bottom, then we popped like 20% in a day to like 4,500, and everyone was like, it was crazy. Why did that happen? Well, derivatives faded the rally for the entire way down from 20K to 3K, and they continued to fade as price ground up, and because that accumulation was happening under the surface. And so like these risk reward moves that these opportunities don't arise too often, but if and when they do, it's we like to cover it and maybe present it to our subscribers.
Dylan Derivative LeClair, very good, man. I love your analysis here. I want to make a shout out to everyone listening on Spaces. If you want to see a chart with the analysis, go to YouTube. I think it's the second pinned tweet up there is the YouTube link. We're simulcasting this both on YouTube and on Spaces, and we are sharing all of these charts on YouTube. What next, y'all?
Yeah, I mean, we can share. We were talking a lot about the macro environment early, and here's some good charts, right? So here's the Fed funds rate, CPI, and in green is like the transparent green colors when real yields are positive, and reds when real yields are negative. And so we've seen since like really 2000, but more so just entirely after the 2008 financial crisis, real yields have been negative, and now they're as deep negative as they've really ever been. I think we had the 40s data set in here. We'd have similar levels, but the Fred database only went to like 1955. But pretty crazy chart. And like when you think about the opportunity Bitcoin has, it's because there's a few $100 trillion of assets out there valued on these costs of capital, on the assumption that you should lend money to someone at 2%, and that's a prudent move when you're gonna when your purchasing power is gonna devalue by 7% a year, or if it's 5% or whatever it is, you're guaranteed to lose money in a fixed income contract, and the equities priced on these cost of capital are also, which makes it's why every equity in the world's overvalued, calculated on a Bitcoin standard. That's honestly the long view here, but when Bitcoin's selling off in tandem with everything else, it doesn't feel like that. That's what's playing out. But that's the information asymmetry that we have.
Yeah, and what's interesting about that rates chart too, I mean, even if you have CPI here at 7.1%, whether it's peaked or if it peaks in a couple months, and through the years you start, through this year, next year, you start seeing it go down to 3 to 5%, kind of a little bit of a mean reversion potentially. It's still much higher than even a potential rate hike of 50 to 100 bips, 150 bips. So you're still going to have this big divergence between the CPI and the kind of Fed funds effective rate. And this has been shared a lot. Dylan's got it in here in the piece in the monthly. It's also in a BlackRock paper from 2019, just how to deal with different debt crises. But an IMF paper from 2011, just talking about the exact game plan for financial repression. What do you do with large government debt levels this huge? Having these negative real yield rates, keeping inflation high, keeping rates as low as possible is the best way to kind of push that debt to GDP ratio down and service that. So, we hit on that kind of framework in our long-term thesis quite a bit. Goes back to, what is the playbook now over the last 10 years, over the next 10 years to do when we have the macroeconomic situation like we do. And so trying to follow this quite a bit and keep an eye on it, because it seems exactly how these playbooks have gone, whether you're looking at, IMF papers, BlackRock's conversations from economists over the last 15 years. It's definitely the number one solution in servicing the debt.
It's either that option or a nominal default, or the US defaults on its debt. So it's going to be option one. And the reality is, how do you position yourself? And like most people listening here probably know how to position themselves, at least have a little bit of Bitcoin. But we're doing all this stuff and doing all this writing, and some people reach out to us and they didn't know this stuff beforehand. And there's trillions of dollars of assets allocated by people that don't understand this dynamic and understand that it's like not a emotional thing. It's not like a want to have happen thing. It's a mathematical thing, which is why Bitcoin is important.
I want to very quickly just shout out. This has been super helpful. You guys have really dove into some of these charts. And I know that your monthly report is going to have countless others that we're not going to be able to touch on this video segment. So for those of you that have been watching this and it's now piqued your curiosity, I highly recommend you go subscribe. There's a free version of the deep dive. Start there. Once you start there, you're never going to want to stop reading what these guys write. So be sure to check it out, subscribe, and check out this upcoming monthly report. I believe it's going to come out later today. So make sure you sign up quick. Otherwise, you're going to miss January's monthly report very quickly. I do want to, if you can go back one to the last image you shared with us. So I'm a little curious about the GDP that is very slow. Other than the fact that they just lie to us, but how for so long has this divergence been allowed to continue? And what sort of, as we see the divergence really start once we go off the gold standard in the early 70s, what in these periods of the 90s and before the 2008 crisis, what was sort of the dialogue said about the acceptance of this, and why did we accept that? If you guys can answer that.
Yeah, so we're showing U.S. nominal GDP and then total debt, securities, and loans. So it's not federal debt, but just aggregate debt. And it's an imperfect measure. Honestly, it's probably wrong, but it's the best statistics they've got. And, essentially it's a calculation of U.S. debt to GDP. There's foreign capital, but it's the best we can do. And honestly, it's pretty informative in its own right. So, this is in linear scale, so it looks like they're just continuing to widen. It would probably look a little bit different in log scale, but regardless, total debt to GDP has gone from like 175% in 1971, which was where we chose to start it, to 406%. And so, I think the debt load is 50x, and the GDP productivity in fiat nominal terms is 20x. So the marginal productivity of debt is declining. Basically the marginal revenue, for each unit of debt we buy, and this has been going on for decades, we buy a little bit less unit of productivity. And the solution to that, the Keynesian economic solution to that, has been, okay, more stimulus, lower rates, more debt. Your debt isn't as productive. Okay, here's some more debt for you. We'll lower the cost of capital. We'll inject money to financial markets. We'll hand out stimulus. But all dollars, all money is credit money. It's more debt that needs to be paid back plus interest. So now we're in a situation where we're in a debt spiral and there's no realistic way out. And so every big brain central banker and politician who says all these fancy words, is their solution is, long story short, we're going to print more money and do different things with it, or fund it. We're going to give more debt to a debt problem. That's the only solution here. It was previously dealt with in the 40s. There was a period of financial repression. And they, before that, like they confiscated gold from their citizens. But now we don't need gold, and we don't need to ask for permission because Bitcoin's just this open network to escape the financial repression. So the only way to deal with the debt crisis, with these huge debt levels is to erode the debt in real terms. And you do that by, a wealth transfer from creditors to debtors. But really it's a wealth transfer from creditors to people that hold Bitcoin, I think, over the coming decade.
I want to present a question that got asked in our YouTube chat. But what if, for example, some sort of event such as Russia invading Ukraine or China invading Taiwan, the latter of which I think has a larger effect on anything to do with computers, microchips. But what effect could those type of events have on Bitcoin in general?
Yeah, I can jump in, and Dylan, add anything you want. The only reason I want to jump in is because recently GBTC Grayscale put out a good research report, and they kind of had this exact chart. It was a geopolitical index risk versus Bitcoin price, and basically, an index to measure those exact type of things and when they spike. And what happened is, like in these times of chaos, and it's a short time frame, maybe over the last 3 or 4 years, but you see Bitcoin kind of spike with that. So that's like maybe a short-term view of it, that in these kind of geopolitical risk rising, like kind of, and maybe that's how I think of Bitcoin too, is maybe like as a chaos hedge of a type of asset, at least from my point of view. But I'm not in like, if we're talking about like Russia, Ukraine, not an active person there, can't speak to like what I would look for in terms of in Bitcoin or something else to like hedge those. But that's my 2 cents quick on it.
Yeah, I don't think I have anything informative to add about geopolitics.
No, I appreciate you guys entertaining the question. Thank you.
We've been rolling for about an hour here. Are there any other charts that we really want to hit on before we wrap it up?
No, I think we covered a lot. I guess you have to catch it in the report we release in a little bit here.
Yeah, I don't know if you want to stop sharing your screen then, but I guess just to close it out, maybe Dylan and Sam, y'all can give one last informative blurb about the deep dive, the monthly report that's coming out later today, and everything that y'all doing.
Yeah, take it away, Sam.
All right, sure. Yeah. Last thing on the deep dive, we cover on-chain derivatives, macro, Bitcoin mining, anything Bitcoin related to the markets. Me and Dylan covering as much as we can day in and day out. We've done a lot of work to make this monthly a much better product, much better value for people reading it. It's coming out to paid subs today. If you're a paid subscriber, we're going to release it to free subscribers next week. So at least join the free tier if you haven't. But yeah, I mean, what we're trying to do is take all these pieces around the Bitcoin market, explain them, not trading signals, but help people give context of what's going on, and a lot of great charts, visualizations, and pieces of information you can take with you.
All right. Thank y'all. Everyone who joined either on YouTube or on Twitch or on Twitter Spaces. Hope this was really informative. We are sharing some really, really awesome charts. And honestly, when Bitcoin's price is volatile, that's when it really helps to kind of look at all that is happening and understand. For me, it's always about just stacking every single day or every single week or every single month. Bitcoin is just that bullish long term, but it helps to know, it helps to understand. And I feel really good about getting the deep dive every single day and staying on top of that. So thanks to everyone who tuned in. And yeah, we'll pass it off to the YouTube boys for their next segment.
Alrighty. Well, thank you again to Dylan and Sam for having joined us. Thank you all for letting me host my first ever show. This was a lot of fun. Just another quick plug and reminder, get a chance to see all of us. Dylan and Sam will be there. There'll be some special events for deep dive for people with whale passes. Dylan will also be speaking at the conference as well. Both myself and Alex will be there. CK Snark himself in the flesh will also be at the Bitcoin conference. use code YTMAG, come hang out with us. As promised, if you find me, I will roll one up for us and we can smoke one together there. So hold me to it, buy a conference ticket, use code YTMAG, and we'll see you in April. Thank you for tuning in today, guys.